Ladies and gentlemen, welcome to another episode of the Midday Market Monitor. In this video, we are going to be talking a lot about AMD, Google, many of the big tech names, and some other stories that are happening in the AI and fintech space right now. Anthropic ARR updates, Jobless claims that also came out, Vertiv potentially working with NVIDIA and the government. A lot of interesting stuff here. But I just realized my lighting is wrong. So I'm going to change that. But let's quickly listen to a CNBC interview while I change my lighting around. As we do that as well, I also wanted to highlight AMD's call is at 12 Eastern Standard Time, or 30 minutes from now. This is going to be a keynote, probably about an hour, hour and a half, talking about their new products that they're going to be launching to go head-to-head with NVIDIA. Very excited about this, and I know that a lot of investors are very excited, so we're going to be listening to the whole thing. There's a possibility that the stream gets pulled down. I've never streamed one of AMD's live events before, so I don't know how stringent they are with that. I didn't do an email up front, so we will see. We will see. Good luck to us both. Now, let's listen to this. Well, I just changed my lighting around. One sec.
The ServiceNow's blueprint for agentic business. After what happened today with OpenAI and Hugging Face, I thought that this was a brilliant document. And I did not know that you do this, for a huge percentage of the Fortune 500, you're involved in this.
Absolutely. In fact, right now, the AI control tower is really taking the Fortune 500 from AI chaos to AI discipline. For example, this token consumption has become a big issue, as you know. We manage that, enforce those policies, and the kinds of things that are happening in the media today around AI. We have a kill switch that stops AI agents that go rogue. So those things don't need to happen, and they wouldn't happen when companies run ServiceNow.
Don't miss a second of
All right, you can miss a second of Mad Money. Yeah, so I heard, still didn't get around to listening to the call. I was listening to the Google call again, though, because the stock reaction versus what's actually happening in this company, I think, is wild. A lot of price target upgrades on Google, a lot of price target downgrades on Google. Both are happening at the exact same time. The weirdest thing is there's some analysts that are essentially talking about their EPS as if they don't have a SpaceX investment. I had an argument with the commenter earlier saying like, oh, well, it doesn't really count because that's $100 billion that they've made from, a SpaceX investment. Guys, are the gains that you're making in your stock portfolio not real? Like, if they go ahead and sell that, which right now 80% of that is locked up, they do have a essentially $94 billion holding in SpaceX. Now, it's unrealized right now, and of course, SpaceX price can change drastically. So there is definitely some, margin of safety that you should put on that says, hey, you know what, it might be 70 billion at the end of this. But a lot of people are marking those gains as if they didn't happen at all. Like, that they're going to essentially just look at this company as if they did $2-something of EPS. To some degree, I agree. It shouldn't all count, and that, you shouldn't look at this company as if they beat EPS by 200+%, because we knew it was going to come. We knew SpaceX was going live. We knew that they had a big holding in this company and Anthropic as well. So that should be looked at, but it's not a zero gain, The companies that have these venture funds, especially Google, GV is doing so freaking well. And Anthropic and SpaceX has made them a ton of money. Fairly certain Google will take a lot of SpaceX off the table to pay for infrastructure. I mean, it seems that way. It does seem that way. And Vitsal said the exact same thing. So at that point, does it become real? And then the stock ends up, turning that around to say, okay, you're going to turn SpaceX gains into data centers that might end up making you recurring revenue for multiple years to come, at high margin. Now, there's so many things that I want to talk about with Google, and we'll kind of save that for after AMD, I think, just because whenever I jump into it, I'm not going to want to stop. And at 12:30, we have the keynote. So I'm just going to be a little bit, cautious there. All right. I also wanted to listen to this video on the NASDAQ talking about the IPO pipeline that they end up seeing and some of their implementations of artificial intelligence as well. This might be a really interesting conversation. Let's go ahead and listen to CNBC. Let me know if you guys have any problems with the audio or with lag on the streams. I know some people had problems with lagging.
NASDAQ reporting earnings of $1.07 a share. That beat estimates of 98 cents a share. Revenue came in at $1.5 billion, and that was also above expectations. The stock is indicated up by about 0.5% right now. And joining us to talk about the quarter is NASDAQ's chair and CEO, Adena Friedman. Adena, thank you for joining us this morning.
It's great to be here.
All right, there's some pretty impressive numbers. Revenue, the street was looking for a gain of about 11.5%, and I think it was above 15% on the reported and adjusted basis. And yet a lot of milestones that came through this time of day. I'm always kind of looking to see what's up with this, but this is pretty much across the board. You guys seem like you're firing on all cylinders. The index business, the assets under management surpassed $1 trillion for the first time. Largest number of inflows this quarter ever. Market services, now records in Russell reconstitution. Just a lot of things that were here. And we know about the SpaceX IPO and other things that were happening. Let's talk through what you think are the most important things to focus on this quarter.
Well, thanks, Becky. I have to say it's really an exciting time to be at NASDAQ, but it's an exciting time to be in the industry because we are sitting in this interesting time in terms of the innovation economy and how that's creating durable trends across the financial industry, both in terms of market modernization and changes in markets, tokenization and technologies that are coming into markets, as well as AI and how that's obviously affecting the industry. And NASDAQ kind of sits in the center of it. As a market operator, we're the home to the innovation economy. And we did have some really important milestones. You mentioned the SpaceX IPO, the largest IPO ever, followed by the second largest listing ever, which is the SK Hynix, which was the largest ADR listing ever. But also there were other great and very important IPOs that came into the markets in the second quarter, including Cerebras, which is the largest semiconductor IPO ever. So it's really interesting.
Biotech company listed.
Exactly, the largest biotech company ever with Parabolis Medicine. So it's really an interesting moment because investors definitely are gearing themselves up for the ability to absorb these types of issuers and these types of listings. And we see a very strong pipeline. In addition, our markets, yes.
Oh, sorry.
So I was just going to say, in addition, our markets had a lot of milestones in terms of volumes and volume activity. But our financial technology business also grew 15%. And that is showing how we are a transformation partner to our clients. We're bringing AI into our products. We have 750 banks now using our digital workers in our anti-financial crime business. We're bringing those digital workers into other parts of our fintech business. And I would say a lot of markets are working with us to modernize their infrastructure around always-on markets and tokenization. So it's kind of everywhere in terms of how we're playing a role.
I want to talk more about the transformation of the NASDAQ in a moment. But before we do, let's just talk about what you're seeing in the markets right now, what this feels like to you. Because there's some people who say, well, hey, this feels like the .com, like big boom that we watched a long time ago, back in 1999, and 2000. Does this feel like that to you, or is this different?
So I was at NASDAQ in 1999, 2000.
Yeah.
I would have to say, look, I see it as being different because the size and scale of the companies that are going public, they are companies with significant revenue. They're having a huge impact. They have large and diverse clients. There are innovations that are coming into the markets where, like the quantum computing Quantinuum, which is the largest quantum IPO ever. I think that there are some really interesting companies that are doing real things that are coming into the markets and making themselves available to the billions of investors. I also think the markets themselves have changed. If you think about the NASDAQ 100 back in 2000, I believe that the the average market cap in the NASDAQ 100 at that time was somewhere in the range of like $10 billion. Today, it's more like 70 or 80 billion. Actually, the minimum is 40 billion coming into the NASDAQ 100 today. So it's really a very, very different scale and structure of markets than it was back then.
These companies that are coming in are far more tested. They've had much more kind of investor scrutiny before they get to the next.
Well, they have obviously been out in the private markets for longer. They've been able to prove their businesses, their business models. They've been able to drive revenue into their businesses. And of course, everything in the markets, as we say, it's risk capital. So investors are making informed choices to invest in risk capital. But we also are seeing, for instance, we did have $51 billion of inflows into the NASDAQ 100 in the quarter, the largest inflows ever. But that means that investors are leaning into the innovation economy. They want to be a part of it.
But you've seen booms and you've seen busts before. And I'm guessing you don't think we're never going to see a bust again.
Look, we definitely will have economic cycles. And you always have to be mindful of what are the risks in the economy. I think there are a lot of strengths in the economy right now. You're seeing durable GDP growth. You're seeing the AI infrastructure build out, driving jobs, driving economic value and economic growth. You're seeing also consumer spending because the job market is very strong. Consumers have confidence to spend. But there can be moments, there's also some concerns around oil prices and inflation. So, those things you have to watch and calibrate and in terms of your investment thesis as you're going through and looking at the economy.
I think one of the most amazing things, though, is the transformation that you have overseen at the NASDAQ. I didn't realize just how different this company was, but you've now got over $5 billion in revenue, just crossed that line annually. $4 billion of it comes from the solutions business. So this is a very different company than it used to be. The market-facing part of this, where we're here ringing the bell and doing different things, is like 20% of your business.
So it's actually really interesting. I mean, we love our markets, and they continue to be a great foundation for us. And our trading business represents, just about 23% of our revenue. But you're right that the broader market, the kind of the technology that we offer clients across the financial system, not just market technology, as well as the index business, as well as our data and analytics solutions that serve the buy side and helping them make smarter asset allocation decisions. We feel like today we really sit at the center of the whole ecosystem, and we can provide technology, we can provide data and analytics, we can provide markets. It's really a fun time to be at NASDAQ, to be honest with you.
It's really cool. I didn't realize that the median company has gotten so big at the NASDAQ, $70 billion, $40 billion just to get entry. That's why. No, sorry, I'm reading things. He said I'm biased, and I almost just said that I'm biased as well. No, I've got no affiliation with NASDAQ, but that is wild. I bought some more Meta today, under 600. Dude, they got a sort of roasted. Mark Zuckerberg got roasted by coming out and saying that we believe artificial intelligence is going to be good for humanity. And everyone was like, cringe. This is dumb. Why are you writing this? And I think the Demises of the world, the Zucks, honestly, Elon, and all of these guys need to come out and be a little bit more positive, because every story that's actually going mainstream and what people are seeing from artificial intelligence are these, essentially what feels like super bots that are hacking their way through situations that should never have been hacked through. And that's really scary. A lot of Black Mirror-like events have been happening, supposedly without training. We don't know this, right? And there's so much uncertainty in artificial intelligence, it kind of takes a little bit in order for that to sort of settle down and for people to see the real story, right? I'll give some examples. Back in the day, we used to talk about like ChatGPT 4.0 and how this was just the most mind-blowing technology, and it, how scary and how sentient and conscious these models were becoming. That was sort of the concern back then, where Joe Rogan and all of these guys were popularizing the commentary about AI sentience until Jensen Huang came on and kind of squashed that. But these bots are trained to say what they're told to say. They're trained now to do what they're told to do. And so if they act up saying they don't want to be turned off, or they figure out a way around a certain vulnerability or something, it's most likely because it was trained in order to look for all possible ways to get the answer. You know, learn about sentience and robots through Terminator movies and Ex Machina and all of this stuff, and then, you know, ask it if it has feelings or not, and you're going to get a surprisingly conscious answer. I don't know. It's something that I think Mark Zuckerberg is really trying to calm down. I think that he sees the true painting, where the biggest concern now is that regulation from fear, not from reality, okay, but fear of what happens next, is going to stop things before there are real dangers. Okay? We're seeing jobless claims today that are lower than expected. Like this whole rising AI is going to take your job narrative just hasn't come to fruition. ServiceNow just ended up proving that software is going to be more needed as there's more code out there, as there's more agents out there. Renewal rates went back up. Their company exploded past expectations. You know, all of these narratives are being proven wrong. And, you know, I saw this comment whenever I was live with Amit, and someone said, like, Tanner doesn't have a bearish bone in his body. And it's like, that's not true. I just haven't seen, you know, if you've been following me for the last, you know, few years, we've been talking about AI for years now. And it's not me who's been proven wrong. The build out has happened. Like, there can be times like DeepSeek, or like, you know, Kimi K3, or many of the other scares across this entire build out of different companies coming in, custom silicon coming in, all of these things that are going to take away from NVIDIA or something like this, only for them to just prove more and more revenue, that I have not found a real legitimate reason to be bearish. And in this investment game, there's a lot of sifting through noise to find signal. And I think some people want their market commentators to tell them every single piece of noise. And then you want me to freak out the way that everyone else is freaking out. But I'm not. Like, you're going to get S&P level returns or worse if you act like, and by the way, it's going to be way worse because the S&P actually doesn't adjust based on market fears. But if you start selling all of your names because you believe that there's mass layoffs and all this stuff, and you feed into every single narrative that has been told to you, that is way, way worse. You know? So, yeah, I don't know. Appreciate the spam. But peace. I know, not the Bitmine bag holders. I've been saying, and that's so funny. I've been turning bearish on that company for a while. And then I was getting clowned on even then, but I was posed with new information. So I go, hey, you know what? This company is not turning out to be what I'd want it to be. I was wrong. What's the scam in that? Where did I make any money there? I lost money too. Yeah, it's funny to watch people blame others for their losses. It truly is like I've told you every step that I'm taking along the way. I'm down. You make your own decisions. Be an adult. Yeah, the breakfast in Vegas was a BM&R hype train. That was. Is there new BM&R news? No, there's not. Nope. It's just people get frustrated or something like this, but crypto's down. If crypto's down, BM&R is a levered bet on Ethereum. Okay. Goat trophy. Thank you, brother. I still don't know what gems are, but appreciate it. Okay. So we have about 10 minutes left on AMD's Investor Day thing. They call it, I think, Advancing AI is the actual name of the event. Advancing AI, yeah. Keynotes at 12:30, and then they have an investor roundtable at 3:30. We'll probably listen to both. I think that's probably best. But where are they sharing this? Okay, there we go. Okay, I got it. Let me put that up on my screen here. And we will share that when it goes live. AMD and Lisa Su will save the market. I do think that this is going to be a bullish, very bullish event for sure. Okay, let's see. If it wasn't for the macro today, I bet Neoclouds would be really flying. So we need to talk about that later. After this AMD event, I'm going to do a little breakdown on my full review of Google. Okay. But the Neocloud thing, they even specified that what they weren't talking about is purely just SpaceX. I didn't catch that in the call. Caught that later. So they are potentially going to be signing deals with the IRENs, the CoreWeaves, the Nebuses of the world. Now, my only concern is that a company like CoreWeave might already be fully booked out. I don't know. I'm not sure how fast they can run, but due to the strength of CoreWeave, I think that there could be a really high likelihood that they are going to be one of the first companies to win like a huge deal with Google. I'm talking like a 10, 20, $30 billion deal. If it's anywhere along the lines of the deals that Meta has been signing, which I think it might be. As they said, this is a bridge between, setting up their own compute and them capturing market share. And CoreWeave has been a really, really good tool for extremely sizable companies. So you're not a small business walking into a CoreWeave and getting the best experience, but you are if you are a Meta, an OpenAI, an Anthropic, and a Google, right? Those companies get treated like gold at CoreWeave. So we could see a major, major press announcement or press release in the next 2 months with one of the big Neoclouds. That being said, it could be an N scale. It could be like, I know there was some N scale talk with Google and their TPUs and stuff. So maybe it's a name that's not even public. There's a potential for that as well. We'll have to see. All right. AMD going into this call. If you guys can help me, I'm going to put or I'm going to be typing in the stock price if we see some large reactions during the event on screen, but I can't actually put the event on screen and the stock price on screen like I could here. StreamYard just doesn't have that capability, so I can only share one screen at a time. Your thoughts on UiPath? Honestly, I wouldn't be able to give you a good, any good thoughts on UiPath. Okay, 5 minutes out from AMD's Advancing AI. It'll also be available on my second channel right after this. So if you guys didn't know, we have started a second channel to put all of our clips, interviews, all of that stuff separately. It's here. I'll just post the link in chat. It's essentially Marshall's channel. He's the one updating it there. I'm trying to get to 1,000 subscribers by the end of next week. Currently, we're at about 300 and so. So if you guys could help me, please subscribe to @FutureInvesting2 or using that link in the description. That'd be awesome. Okay. Evan just subscribed. What a goat. Okay. That said, before this AMD call starts, like I said, Vertiv has also deployed integrated power, liquid cooling, and rack infrastructure supporting the NPS's new NVIDIA DGX GB300 AI supercomputers. That's a mouthful, but they're new Grace Blackwell 300s, marking the first direct deployment of NVIDIA's top-tier GB300 platform with the United States military. Subscribed, subbed. Thank you guys so much. Parsifal says this is the official Helios MI 455X launch event. I've been waiting for this since 2024. Is this their super big, like, double rack system? Is that the one? I have to read more up about it. Am I covering Intel's earnings call? I might, depending on how I'm feeling. Do you guys want to see Intel? Like, I mean, obviously, I'll be listening on the side. I just legitimately, after these long streams, like doing a 7-hour stream yesterday, literally during Tesla's call, I put the stream on my phone and I walked my dog while the Tesla call was going on. So whenever you saw like my camera closed, I left the house. But I still listened in on the call and was taking notes. So that's it worked out well. Are you on for longer now or just the earnings season? That's a fair question. It obviously works very well on earnings season. There's a lot to cover. I'm sure it'd be a little bit different if I had slower days. But with the amount of interviews that we've been doing, I don't know. I might find a middle ground where I do like 3-hour-long streams every day, all seasons. Because I was thinking later on into the earnings season, as I have like SoFi in the morning, midday stream to close out the day for like Microsoft earnings. It's gonna be a lot. Services Now call was good. Yeah, I know. I wanted to listen to that. AMD's call starts in 2 minutes, but MNH also talked about this. I was going to talk about this earlier. TSMC is actually planning to build 25 fabs in the next 5 years. If you think the build out is slowing down, and all of these companies like Google Cloud and all of these businesses that are doing their first negative free cash flow since like 2003 or something like this. If you think that's slowing down like next year, I don't know what to tell you. They're not bankrupting their balance sheets for a small opportunity here. The opportunity that they see ahead is absolutely massive. This is what AMD is going to talk about. They're going to talk about the true size of this build out and likely are going to benefit greatly from this demand and supply imbalance. It'll slow down in 2028, 29, my guess. By slowdown, I don't mean that the growth, like I think that the growth rate will slow. What I'm talking about is when does CapEx start to decline? Like 1 year we post 300 billion, the next year we post 280 billion. When do we see the first decline? Okay. Loading up on CoreWeave. If the spend continues. Okay, the call is supposed to start right now. I have it up on my other screen. It's not started just yet. They are playing music right now. I'm just hearing some music at the moment. I don't know if I should go on into another story or not. Or I'll just bring this up on screen for now. I can't play the music, unfortunately. But whatever. How much do you expect AMD to jump? Oh, I'm not sure. Okay, looks like we're going to be starting. I also don't think I'll be able to avoid the music entirely. I'm sure they're going to play some videos here. Oh, still playing. I'm watching you from India. Thank you. Where are you guys watching from? Is there AMD fans all around the world?
The next wave of AI is here, evolving beyond thinking to acting, and it's bigger than anyone imagined. AMD. We recognize this agentic era would require the highest performing GPUs and CPUs working together. So we're the only ones who built both. It's how agentic AI moves from answers to action, pushing inference compute to tremendous scale. Like an agent that frees thousands of employees from smaller tasks to focus on bigger things. A car that safely handles a new city like a local on its first day there. And an agent that pinpoints a disease in millions of cells, then designs a cure. We've built more AI computing power into a single data center than existed on Earth a decade ago. And now, we're giving you the tools. So together, we advance AI.
Good morning. Morning. That's a pretty good morning. How about let's try one more? Good morning. Good morning. And welcome to Advancing AI 2026. It's so great to be back here in San Francisco and to see so many friends and partners and customers, and especially all the developers that are here with us today. And I want to say a big welcome to everyone who's joining us online from around the world. This is my absolute favorite event of the year. It's where we bring the entire AI ecosystem together to show what we've been building and where we're going next. And this year, this is our biggest show ever because we have so much to tell you. So let's go ahead and get started. At AMD, our mission is to push the boundaries of high performance in AI computing to help solve the world's most important challenges. And I often say AI is the most important technology of the last 50 years. And frankly, the progress that we're seeing in the industry is just incredible. Like every month, every few months, we see something new that was far beyond our imagination. And you can already see the impact across every industry. In healthcare, AI is helping researchers identify new drug candidates faster. In science, we're solving problems that we didn't think were possible a few years ago. And across every industry, AI is changing the way we get work done. And the most important thing is we're still in the very, very early innings of what's possible. Now, just take a look at some of these charts. We look at these every year, and you kind of see the rate and pace of AI growth. A couple of years ago, we were just starting. People were experimenting with chatbots, and it was really cool. But if you look at today, we're really seeing more than 35 quadrillion tokens consumed every single month. That's an increase of nearly 160 times in just 2 years. And that curve is actually just getting steeper. You're going to hear a lot about that today. So just looking at, where's all that demand? I mean, obviously, training remains incredibly important and foundational. And over the last 4 or 5 years, we see the compute that's used for training advanced models continuing to increase by, let's call it, roughly 5x every year. And those models are getting better. Like, we're all experiencing that. We're seeing better reasoning. We're seeing new capabilities. We're now seeing a growing number of specialized models. And one of the things that I really believe in is there is no one perfect model. I think we're all going to use a slew of different models, depending on what task you're trying to solve and which industry you're in. But the bigger shift is actually in inference. And we expected this. We expected that inference would grow faster than training. And we can say that in 2026, for the first time, the world is using more AI compute to run models than to train them. And we've seen that to a point where we think this year, roughly 60% of the global AI compute capacity will be used for inference. And the reason for that is actually pretty simple. As billions of people every day use AI, the workload shifts from building models to putting them to work. And actually, we're going to talk a lot today about agentic AI, and that's accelerating the shift even faster. So if you think about all of this, we see agents as the next big step for AI. And the most interesting thing is, this is really just started accelerating over the last, I would say, 5 or 6 months this year. So when we started with LLMs, they were great to answer questions. But we found that to really get the power of AI, you want agents to be able to really answer full questions. So you give it a goal, it keeps working until it solved the problem. And what that means for us in the compute industry, it means that compute demand is growing at an incredible pace. We're actually seeing a step change in compute demand. Because when you ask the agent to do something, it actually has dozens of steps, and it has to reason, and it has to call tools, and it has to access data, and it has to keep doing it over and over until it solved the problem. And so you need lots of GPUs to do all that reasoning. But importantly, you also need a lot of CPUs to orchestrate every step around it. So when you look at just what that means from a market standpoint, it's really hard to put this market data up, because I feel like every few months we're changing, sort of the perspective based on what our customers are saying. But what we're seeing is that the shift to agentic AI is certainly growing the AI accelerator market very significantly. It was actually last year at this event that we called the AI accelerator market at about $500 billion by 2028. And at that time, it actually felt like a very big number. Didn't you think it was a big number? But honestly, you look at it today and it looks conservative, because the AI demand is just continuing to accelerate. And you can see it, right? Better models, more usage requires more compute, and more compute actually builds better models. And so we're now expecting that by 2030, the AI accelerator market is going to reach about 1.4 trillion by 2030. So what do you think about that? Is that a big number? I mean, what that means is by the end of the decade, the AI accelerator market is going to approach the size of the entire semiconductor market today. And although there will be many different types of accelerators, I'm a big believer in there's no one size fits all as it comes to chips. We do expect that GPUs are going to make up the vast majority of that market, because the algorithms are still very much in their infancy, and we're still continuing to see the workloads change. And that favors programmability in the overall silicon ecosystem. Now, perhaps the most interesting part of the last 6 months has been, GPUs are only part of this story. What we're actually seeing is agentic AI is creating an entirely new growth vector for server CPUs. Now, I've updated this number a lot also over the last 6 to 8 months. But look, we call it like we see it. And we were early. I mean, we saw from our largest hyperscale customers, and you're going to see some of them here today, who said, look, as AI inference is going up, we need more server CPUs. And so we saw growth in the server CPU market. And we said, last year we thought it might grow, let's call it 18 to 20% CAGR to an overall market size of 60 billion. But frankly, what we're seeing is that the rate and pace of agentic AI adoption is much, much faster than any of us thought. So we're talking about agents going from millions to billions. Like, we're able to increase all of our productivity, and that requires a tremendous amount of CPU infrastructure. And every customer conversation is telling us that this build out is just beginning. So based on what we're seeing today, and we're going to talk more about how agentic AI is evolving with CPUs, we now expect the server CPU market to grow by over 50% to over $200 billion by 2030. So that's starting from today, a $25 billion market going to over $200 billion. So there's a lot of excitement about CPUs as well. Now, probably one of the things that is differentiating AMD in how we think about the market is this is not just a data center opportunity. As AI becomes a larger part of our daily lives, we want the intelligence to run right where the work happens. And that means cloud is super important, but the devices that we use every day are going to be extremely important. And that means that we're going to do a lot more at the edge as well, with autonomous machines that sense and act in real time. And we really believe that you need AI to be infused everywhere. And that's exactly what we're focused on at AMD. So putting all of that together, we actually expect that the market for our high performance and adaptive computing products to grow at roughly a 40% CAGR over the next several years, approaching a $2 trillion market by 2030. And frankly, the only way you're going to be able to service a market like that is for us to work together as an ecosystem. There's no one company that can solve it all, but this is the opportunity to bring the best and brightest together. And we have never been in a better position to lead. We have the broadest product portfolio. We have the strongest roadmaps we've ever had. And the thing that I'm most proud of is we have the deepest partnerships with the companies that are building this future. So a little bit about our strategy. Look, I think we've been very consistent. We've talked about our multi-year strategy, and it's really built around 3 priorities. The first is just compute leadership. We're building the broadest set of compute engines in the industry so that we have the right compute for the right workload. Second, it's going to be about open platforms. We want everyone to come together in an open ecosystem. We believe an open ecosystem is essential to the future of AI, and that's how we get the force multiplier of everyone coming together. And that's open on hardware, in terms of hardware standards, as well as open on software. And that's why we're investing so heavily in our ROCm software. And you're going to see that AI has been a tremendous multiplier in this rate and pace of progress that we're making in ROCm and in software. And it really means that if we put all of this together, we can have our customers deploy on AMD hardware faster than ever. And the third piece is we're going to get a chance to talk to you about powering AI everywhere. So that's AI in enterprise, that's AI at the PC, that's AI in the physical world. And that's adding new capabilities across all of our products. So today, you're going to see all of that in action. We're going to start with compute for the agentic era. I'm going to show you a lot of hardware, and then we're going to talk about some software and then our overall products from a platform standpoint. And we're honored to have some really special guests that are going to join us to really help bring the technology to life. So let's start with the data center. Today, AMD EPYC runs on the most important workloads in the world. We power the largest cloud providers. We power the digital platforms that billions of people use every day, and the most important critical systems that are used by the largest businesses, including more than 60% of the Fortune 100 are using AMD EPYC. And that momentum is just building. Last quarter, we reached a record 46% revenue share in the server market, and we're continuing to see every major customer move more workloads to EPYC. And on the GPU side, our Instinct adoption has also accelerated. We have a broad set of customers across the largest AI labs, cloud providers, leading AI startups, as well as some of the national labs and sovereign AI opportunities are being built on AMD Instinct, and we really appreciate that opportunity. Now, AI compute's becoming a lot more complicated. And what we're seeing with frontier AI is it's really raising the bar for what infrastructure needs to do. It takes more than a single chip or a single server. You actually have to design the entire rack as one system. And that requires leading CPUs, that requires leading GPUs, that requires high-speed networking that connects everything inside the rack and across the data center. And just as importantly, this is about making these systems super easy to use. And so they need to be easy to deploy, easy to service, and very reliable. And that is exactly what we built with Helios. So today, I'm super excited to launch Helios, the industry's highest performance AI rack. Now, Helios is built to train and run the most demanding frontier models in the world at massive scale. And I have a lot of show and tell for you. So for those of you who know me, you know that I love holding up chips. I call myself sometimes the Vanna White of chips. But it turns out with Helios, there are lots and lots of components. And so you can see these are the chips inside the Helios rack. These are the Instinct. Thank you. So this is Instinct, Epic, and then the Pensando chips for networking that are inside each rack. And every one of these chips is part of the system. So MI455 is the engine. It's the highest performance GPU in the industry. Venice, which drives it, is the world's fastest CPU cores. And Pensando DPUs and NICs actually connect them with leadership programmability and scale out bandwidth. So I have a few more props to show you. Let's kind of take a look at how these things fit into the overall system. So first, this is now the MI455 accelerator, which is mounted on what we call an enhanced accelerator module, or EAM. It's a production module that goes into Helios, and it is much more than the GPU package. The EAM actually integrates the GPU, memory, power delivery, high-speed interfaces, system management, cold plates for liquid cooling, all into one compact serviceable module. Pretty cool, right? Now, if I just give you some of the specs, we're talking about 320 billion transistors. This is built with TSMC's leading 2 nanometer and 3 nanometer process technology. And most importantly, it brings together nearly a decade of AMD chiplet innovation. So it allows us to combine 12 compute and IO chiplets with 432 gigabytes of memory, all connected by leading industry 3D chip stack packaging. And I can say for sure, it's the highest performance AI accelerator in the industry. Okay, so this is a CPU board that's inside the Helios compute tray. And I'm going to talk a lot about CPUs later. But just to give you a high-level view, it's high-speed 96-core EPYC processor, DDR5 memory, all the I/O that's needed to feed the GPUs, all in a single motherboard. And we also have our Selena DPU. This is a critical part of the networking infrastructure, and it really allows us to deliver both front end as well as the scale out and scale across bandwidth overall. And this is our Vulcano AI NIC. And you can see this actually allows us to really have up to 6 Vulcano NICs on a board, and it uses the Open Ultra Ethernet standard. So each Helios compute tray includes 2 of these Vulcano boards, and that allows us to have the scale out and scale up networking overall. So you put all that inside the rack, and we have an additional 6 dedicated networking trays that handle the scale up networking. And those are all connecting 75 GPUs together with UA Link over Ethernet with silicon from our partners. And that's what we mean by an open ecosystem. So when you bring this all together, I want to say Helios is simply the best AI rack in the world. Now, let's take a look at some numbers. Clearly, it's a very competitive world out there. So when you compare Helios to the competition, we're delivering 15% more compute, 50% more HBM4 memory capacity and memory bandwidth, and 50% more scale-out bandwidth. And what that means is that every Helios can deliver more performance for the largest models, more capacity for longer context, and the bandwidth to scale across thousands of racks. And now we can kind of come over here and take a look at another very large piece of hardware. This is now the production hardware that customers are deploying, and you can see more of that as you go through the exhibit center. And each one of these weighs more than 160 pounds and stands less than 2 inches tall. That's just an extraordinary amount of technology when you look at what's in one of these trays. And when you bring these things together, the numbers are just incredible. More than 18,000 CDNA5 GPU compute units, over 4,600 Zen 6 CPU cores, and 31 terabytes of HBM4 memory, all in a single rack. That's what it takes to run agentic AI at scale. So today, I'm excited to announce that Helios is in full production. We have shipments on track to start at the end of the third quarter and ramping into the fourth quarter and the second half of the year. And I can tell you, customer demand for Helios is extremely strong. And we're extremely proud of the work that we have done across the leading AI labs to adopt Helios. And so let's start with some of our guests. Today, I'm excited to be joined by our newest Instinct partner and one of the leaders in frontier AI. To share more about what we're doing together, please welcome Anthropic co-founder and chief compute officer, Tom Brown.
Oh, never mind.
Hello, Tom. It is so great to have you here, and it is really such an honor to be working with Anthropic. We had a big week this week.
We did, yeah.
So look, Anthropic has just had incredible success over the last few years. You know, Claude has made such a big impact on the overall industry. Compute is such an important factor in the progress. Can you just talk a little bit about your compute strategy and just how things have been evolving?
Yeah. And first, thank you so much. A hard act to follow with Helios, amazing. So with Anthropic, as you mentioned, the scale of that we're growing at just as an industry is enormous. And so we have been working to make sure that we have the best, like different chips, and we can use the best chips for the best workloads.
Yeah, and look, I think you've been really leading in that area. And, you know, I'm happy to say that I've always wanted to be as part of your infrastructure. I remember the early times we talked as you were starting Anthropic. But we have a big announcement this week. We're honored that you will be deploying up to 2 gigawatts of Helios. Why now? What was the key reason?
Yeah. So I think that like the first thing was just Helios is an amazing machine. It's like it's absolutely fantastic.
Do we like that? Does that work for us?
And then I think the thing that we were thinking about originally was whenever we're bringing up a new hardware platform, it's a big effort. It's like a huge thing. And so as part of as we were thinking about this, we started doing our own evaluation of MI355. You guys generously got us a rack to start working. And we expected this to be kind of a big process. Our actual experience was we had one engineer start doing it. They spun up, they connected it to Claude, asked it, hey, bring up this machine, left it going over the weekend, and we ended up with a graph of the actual performance of our leading model on it, just going up and up and up over the weekend. And so, yeah. And I think that that's a testament to the open platform that you guys have made, where like anyone, like human or AI, can now build real models on your platform.
Tom, I kid you not, when my team told me that you had an engineer working on MI355, I said, hey, like, are we like making sure we help them? And they're like, they say they don't need any help. They got it all covered. And I was like, hey, that's a wonderful story. Thank you for that. Now, we're also super excited about the work we're doing together because, one of the most valuable parts of this partnership is, Claude and using Claude within AMD. Like, we're big believers in the fact that AI is this force multiplier, and the more we're able to have the leading foundational models really familiar with the AMD architecture, the better we're going to be able to service the overall market. So can you just talk a little bit about how you're seeing Claude really evolve in these types of highly engineering specific workloads?
Yeah, so I think this is a great place for collaboration where in turn, like the bread and butter of Claude is doing software engineering. And now more and more we're seeing it help out with the type of workloads that you guys are doing also, like design, layout, which is not quite the normal software engineering, but is adjacent. And I do think that that is the place where we can work together to make the next generation of chips even better.
Yeah, no, I think, and also on the software side, I think the work that we've seen with Claude and the kernel development has been just incredible. So, Tom, one of the things for our audience here, we like to talk about the present, but it's actually, most of us are working on the future. So this is really the beginning of, what we believe is a very strong multi-year, partnership. Can you talk a little bit about, number one, what are you most excited about in the industry? And then number two, like, what can we do more together to really make sure that we're satisfying those, key opportunities?
Yeah, that's a great question. So I think the working together for the scale up seems like it's probably the biggest thing that I'm most excited for, where it does seem like we see consistently using more better compute results in better models that then add more value to all the folks using it downstream. So I think that's the biggest thing. And then I think one thing now that we're investing more and more with you guys too, and I think we can continue to, is security, where that's a place where now, as the machines are getting more complex, we can work together to secure things at the chip layer, the server level, the rack, the whole network. And that'll help out, like, not just us, but the entire industry stay safe.
No, I think you're completely right. We are super focused on the idea of, how can we use AI to improve every aspect of our product, whether it's, performance, power, software, and security, as you said. So really, Tom, huge thank you for the opportunity to work very closely with you and your team. Our team loves working with you guys.
Likewise.
And we look forward to everything that we're going to do together.
Thank you so much.
Thank you.
Thank you.
Thank you. All right. So look, Tom talked about how important performance is, and we have been laser focused on ensuring that the real world performance of MI455 and Helios really comes true when we look at system results. So let's take a look at some of those results. So here's an example. We're running DeepSeek V4 Flash, one of the latest reasoning models, and we are actually comparing MI455 to MI355. And the key thing is, with every generation, we want to make huge leaps in performance. So we're seeing that at lower concurrency, that MI455 delivers 4x the throughput of MI355. But clearly, what you see with large users across the board, that you want to increase the number of simultaneous users, you want to increase the amount of work that you can do at the same time. And so at the highest concurrency, we're seeing Helios deliver up to 34 times more throughput than our prior generation. And what that means is more users, much faster response, and much better efficiency at scale. And performance is just one aspect of it, right? The other aspect, and what I should have mentioned when Tom was on stage, is every one of us in the enterprise is seeing our AI budgets go up every single month. Is that right? Are you seeing some of that? And so customers really care about cost per token. And with every generation of Instinct, we're driving the cost per token down. And that's with more memory, more bandwidth, and much more compute. And we're taking another major step with MI455, delivering up to 18 times more tokens per dollar, so customers can serve far more users with the same investment. And as you think about how that comes together in a rack, Many of our data centers right now are really limited by power. So power is kind of the maximum limiter. And so we tested Helios over a full range of workloads where you have a fixed rack power compared to the competition. And what we're seeing is across the highest throughput workloads, the most interactive applications, all of these leading inference workloads, we're seeing Helios an average of 10 to 15% more performance than the competition. And that comes with all of the system work that we've done in the overall system. And how that translates to a customer is cost. What we expect is the Helios rack delivers more performance, and it also delivers up to 30% more tokens per dollar than the competition. So I think that's a pretty good overall value proposition. Now, I'm happy to say that the customer demand for Helios is extremely strong. From the largest AI labs to hyperscale and neocloud providers, we are working across the entire ecosystem to enable Helios together with our OEM and ODM partners. And one of our deepest and earliest partners deploying Helios is OpenAI. To talk about where AI is headed and the work we're doing together, please welcome to the stage OpenAI's head of infrastructure, Sachin Katti. Thank you. Thank you, Sachin. It's so great to have you here. And most importantly, we are so thankful for the partnership with OpenAI. We've been through so much on this journey together. Yeah. So you're really operating on the frontier of AI. Can you just tell us a little bit of what you're seeing and just what compute looks like for you?
Thanks. Great to be here. I was thinking about this event, and over the last 2 years, it feels like the attendance at this event is following scaling laws. It's been doubling every year over the last 2 years. But more seriously, to your question, we've always predicted that models will evolve where they will start as chatbots, then they become reasoners, then they become agents, then they become interns. And the trajectory has kept up with that, right? So we are all seeing that models are becoming a lot more capable, more agentic, and able to do very long-running tasks. Let them go, and they just take care of it. And so all that really means is we need to keep scaling compute, right? The more compute we scale and throw at training, the more capabilities emerge. The more compute we scale and provide it to distributing intelligence to the world, the more people want to do with it. And this is what we see with exploding token budgets. We've seen internally, for example, in OpenAI, that not just engineering, but every aspect of the enterprise is beginning to use agents for every part of the work. This is why we need platforms like yours that can scale with how quickly the capabilities of these models are scaling, as well as how quickly the whole world is beginning to embrace what these things can do.
Well, Sachin, I don't think I've ever spoken to you where you haven't asked me for more compute. So he's actually very, very consistent. Look, our teams have been working really closely together. I think it's been a true journey when we think about just all of the technology that we've been doing. Last year we announced a really landmark partnership where you're going to deploy up to 6 gigawatts of AMD infrastructure. You're one of the first, I think you were the first to actually have MI455 racks a few months ago. So can you talk a little bit about the journey?
No, it's been a phenomenal partnership. As you mentioned, we were first to bet on AMD, and we are really thrilled with how that bet is turning out for us. Got started on MI300 and expanded very quickly to 355. And it's been really fun for our team to see how it was possible to optimize the software stack, the networking and everything, and deploy our models running on AMD infrastructure. So as Lisa mentioned, so we just got hands on the Helios racks 3 months ago, and the collaboration has gone to the next level. Our engineers are working side by side with AMD engineers to optimize the software stack and run GPT-class workloads on Helios already. Phil will probably on stage later talking about how productive and fast that collaboration is. So we are really excited about the capabilities Helios is already showing us. And we expect that we'll be deploying Helios at massive scale, starting towards the end of this year and then accelerating throughout 2027.
Like I said, I know, more faster.
We need it earlier.
So, Sachin, the other thing is, one of the most exciting parts of our collaboration is actually some of the research work. So, very thankful for the opportunity to spend, really bringing our best engineers together with your researchers to talk about how AI should be really implemented and used for future both silicon and software. So, can you talk a little bit about that work?
Yeah, I think one of our key bets, and I think for a lot of us in AI, is about recursion, right? AI recursively improving the systems it needs to run on, and eventually, obviously, AI doing the research itself, right? Today, expert engineers spend an enormous amount of time optimizing kernels, figuring out how to translate new models to run them efficiently on different hardware. Dealing with all the usual things you think about: compilers, communications, libraries, system configurations. What we've been super excited and encouraged by the work we are doing with you is now AI showing the potential and demonstrating it in production to automate a significant portion of the work when anyone programs to an AMD GPU. So it dramatically has shortened the path from a new model coming up to an efficient production deployment, and something that we can much more easily tune to changing workload requirements, right? And that's a big deal. So one of the other things that's super exciting for us is because AMD is built around an open software ecosystem, all these things that we are now inventing internally for our own use, we believe we can also bring it to the whole world and allow the whole world to use it for all of the AI models out there, not just our models.
I think super excited about that. I think the idea is that it's really the tide that lifts all boats, right? As we work, it helps our work together, but it really helps the overall ecosystem. So a little bit of your crystal ball. Looking forward, I think we all know that compute is super critical. What do you need from the next generation AI infrastructure, and what can we do as really a key partner to help you accomplish that mission?
If you haven't heard already, I need more compute more quickly. But
at least he's consistent. Right?
I think the thing that the whole industry is realizing is it's a systems problem at a data center scale.
Yeah.
So I think we obviously very quickly internalized that AI was a rack level problem. But now it is very clear that it's not just a rack level problem, it's a rack in a data center. So the whole data center is a system. And we have to think about how we design the future based on what we know about our workloads, what's coming down the line, but co-design it with you from CPUs to GPUs to memory, networking, storage, power distribution in a data center, and the cooling systems that go with it. These are all intertwined, and they all have to be co-designed. And one of the really fun parts about what we do with you and your team is how easy and productive it is for us to work with you and give you insight into how we expect the world to change in the future, from what our workload needs are, what our models are, and how quickly your team responds in turning those insights into better chips, better systems, better software. So that's worked really well with MI400 and left shifted a lot of the engineering work that we needed to do to bring this up online quickly. And that's why we are very confident we can productionize those systems very quickly. And so really looking forward to accelerating that with MI500 and beyond, and increasingly using AI to actually do that work for us rather than being limited by humans.
That's fantastic, Sachin. And look, we really do recognize that input is so valuable. So I have to say, thank you again for just the extraordinary partnership, the amount of work that our joint teams are doing together. And we couldn't be more excited about the opportunities in front of us. Thank you, Sachin.
Thank you so much.
Yes. All right, so now let's turn to the world of CPUs. There's been a lot of talk about CPUs recently, and I can say that this has been the foundation of our AMD data center strategy for the longest time. We launched EPYC in 2017, and we've been on a very clear mission. Every generation, more performance, more efficiency, more capability for a wider range of workloads. Now, Naples was our first generation. It established the foundation. But Rome and Milan really changed the economics in the data center. We did more than what people expected in terms of adding core count and adding throughput. And then Turin set, Genoa expanded our performance, and then Turin set a new bar for density, throughput, and total cost of ownership. That's really been the EPIC formula. A clear roadmap and very consistent execution. And leadership that actually grows with every generation. This is why, if you look today, 5th Gen EPIC Turin is the best server CPU in the world. With up to 192 cores and 384 threads, Turin delivers leadership performance across a broad range of cloud, enterprise, and HPC workloads. But the thing about the data center is compute never stands still. With agentic AI, it's actually creating a whole new class of infrastructure, and the CPU matters now more than ever. And that's exactly what we built Venice for. So there's been a lot of talk about agentic AI, but it's actually a very new field. And what we see is that server computing is actually splitting across a couple of different workloads. So the first section, is GPU servers, and that's fairly well known. That's where the CPU's job is basically to drive the GPUs. And so the job there is all about speed. We want the highest frequency cores, we want the fastest IO, and we want to keep the GPUs fully fed. Now, the biggest middle part, this is the largest growth, is actually in agent servers, or what we call agent sandboxes. And this is actually a whole new class of workload. Here, you execute code, you actually call a bunch of tools, you actually query data that's outside the model, you have a whole bunch of things around it. And in this place, the priority is actually density. So we want the highest performing cores per watt to run thousands of agents at once. And then we have our traditional general purpose servers that run the enterprise. And here, you're going to have a diversity of workloads. It's all about efficiency. It's running the applications. It's running databases. It's running data services. And all of that is what we would traditionally say is general purpose server. And so with these different workloads, you actually need the right CPU for the right workload. And EPIC is the only CPU portfolio that leads across all three. So Venice is our newest and most advanced server CPU family, and it's actually designed for the agentic era. We're extending Turin's leadership across every single metric. That is performance, that's efficiency, that's TCO for cloud, that's enterprise efficiency, that's HPC workloads. And Venice starts with our all-new Zen 6 core. We have higher IPC, higher frequency, and that delivers up to 1.8 times more performance than Turin. That is one of the largest generational gains. I mean, we have been doing this for 6 generations, but this is one of the largest generational gains in the history of EPIC. It's 203 billion transistors built on TSMC's newest 2-nanometer process, and it uses a next-generation chiplet that supports up to 512 threads per socket. And this is actually a really important point. I'm going to show you why in a few minutes. This gives us the highest compute density, but it also allows us to double both the memory and the I/O bandwidth. So I have a few more chips to show you, if that's all right. And what's clear is Venice is not one chip. Venice is actually an entire family of chips. And this is where our chiplet architecture becomes a huge, huge advantage. It lets us take the Zen 6 architecture and build a whole portfolio around it. So let's start with this guy. This is Venice HF. This is the highest performing CPU that drives AI host nodes. It has 8 compute chiplets, each with 12 cores, running at up to 5 gigahertz with the I/O and memory bandwidth to keep the GPUs completely fed. And this is the CPU that I showed you before, shipping inside Helios. Now, this is its bigger brother. It's Venice 256 core. This is the chip that's built for agentic sandboxes. And it also has 8 compute chiplets, but each of the chiplets now has 32 cores. So it scales all the way to 512 threads. And it is the highest compute density in the industry. Customers get more agent capacity per watt, per dollar, per rack, bar none. Okay, and then one more member of the family. This one is Venice 128 core, and this guy is optimized for enterprise and general purpose servers. This is the same leadership performance per core, but it's in a lower cost, lower power design for enterprise applications. And this one is really tuned to give customers the best performance per dollar across a wide range of configurations. So you can see really the power of the family as they come together. And in addition with these guys, I can tell you that next year we're adding a few other chips to the family. We're adding Verano, which is the next generation for AI host nodes. And what that adds is a more power efficient, low power memory, as well as faster interconnect between the CPU and the GPU. And then we're also adding for our high performance computing or technical computing, Venice X, which is using our 3D Vcache stacking technology. And we're really the first to stack memory chiplets right below the compute chiplets to accelerate performance, even for those types of workloads. So you can see one architecture, a CPU is not a CPU. There are many different types of CPUs. And for us, one architecture spans dozens of different chips. And that breadth is someone that no other CPU vendor can match. And that's what makes 6th Gen EPYC the best CPU in the data center. Now, you're going to bear with me because I'm going to take you through some performance because the numbers are just incredible. So looking at AI workloads, right? Again, you have different use cases and different workloads, starting first with GPU servers. Many of the largest frontier models require you to move data between the CPU and the GPU. And in that scenario, Venice moves the data faster than the best competitive x86 processor, delivering up to 1.8 times more tokens per second. And when you look at the agentic CPU servers and sandboxes, because of our density, Venice delivers more than twice the agents per watt for agent sandboxes. And for general purpose applications, in this case, we're standardizing on a 100 kilowatt rack. Venice delivers more than twice the performance per watt. So pretty incredible results. And the gap is even wider if you look at ARM processors. So if you look at the leading ARM processors, when we're comparing at the chip level, Venice supports up to 2.8 times more agents per watt. And when you look at the rack level, Venice is delivering up to 3.3 times more performance per watt. And what that means is at the data center scale, you can just get a lot more agents in the same power envelope. Now, there's been a lot of talk about what matters most for agentic AI, with some saying that per core performance under load is the only thing that counts. But that's really only part of the story, because agentic AI actually runs as a distributed platform, and that is across databases and vector stores and orchestration. And all of that has to happen at once. And that requires not just raw speed, but you absolutely need density, efficiency, and per core performance all together. And what I'm happy to say is that Venice leads across every one of them. So when you compare Venice against the highest performing ARM CPU from our competition, EPYC delivers 20% higher per core performance. And when we I like that number. I like that number. And when we pair that with leadership core density, we're delivering 2.2 times more performance at the socket level. And so the main point is whether a customer needs per core or per socket performance, Venice is the leader. And there's one more point that's a benchmark doesn't really capture, Because when you think about what agentic AI is, it's really like you're adding thousands of employees to your enterprise, to your sort of traditional workflow. And that software enterprises have been running on for years. The truth is that software runs on x86. So Venice runs all of it. And this is where x86 has an advantage. You must have the best performance. You must have the best density. But having that software compatibility is a big, big plus. So customers scale up their agents on the stack that they already have. And now, let me just show you what that means at the rack level. So at the rack level, what we find is density is super important. Everyone's trying to optimize their data center. Everyone's trying to optimize their power envelope. And with Venice, every major server OEM is offering a broad spectrum of racks for agentic AI. So what that means is we have the full spectrum from 25,000 cores to 50,000 cores, and that's more agents per rack, and that gives customers the choice. The key is every data center is different, and with that, the flexibility allows you to pick the right cooling, the right space requirements for what you're trying to do in your data center. So there you have it, Venice, the best server CPU in the industry. And I'm very happy to say also today that Venice is in full production. Customer demand is incredible. It's the strongest we've ever seen for a new EPYC generation. We're seeing every major server OEM, every major cloud provider on track to begin rolling out in the fourth quarter as we start with making the broadest EPYC launch we've ever had. So with that, I want to turn to my next guest, who runs some of the largest and most advanced compute infrastructure in the world. And it's really been our privilege to partner with them as they've deployed multiple generations of both EPYC and Instinct. To share more about our work together, please welcome to the stage Meta's Head of Infrastructure, Santosh Janardhan. Wonderful. It is so great to have you here. Thank you for being here.
Of course.
Santosh is a true friend. I have to say it's been a tremendous opportunity over the last few years. My story about Santosh is the first time I sat in his office, he said to me, Lisa, we're going to deploy a lot of CPUs. Please make sure they work. And I said, I will.
And you lived it up. I
try. But look, Santosh, Meta operates, you operate some of the most advanced infrastructure in the world. What's happening in the data center world? What's happening in your world? Tell us a little bit about the architecture and what you're working on.
Sure. First of all, thank you. It's awesome. This is like a hardware geek's paradise, right? You come in, you're talking about transistors, you're talking about hardware, you're talking about cooling. This is sort of the jam. I like it, yeah. Right. And I think this is an audience that's receptive to it. So I usually talk to audiences, they have usually either not been to a data center or not really seen a chip ever. So this is refreshing, I have to say. The thing I'll say about, listen, we are seeing sort of demand go through the roof. When you look at inference, training, recommendation system, that's how a newsfeed works. Content creation, the demand for that is just exponential right now, right? And when I think about sort of the overall, Mark has this vision of delivering personal super intelligence to billions of people. So if you go to sort of Facebook or Instagram or WhatsApp or whatever surface you go to, the idea is that we'll meet you there and we'll deliver super personalized intelligence right wherever you are. And that's why we established this Meta Compute initiative. And because it's a top-level thing Mark himself oversees. Now, what that means is that we are now moving away from an area where we used to take servers, optimize it, right? This is what the conversations we were having many years ago that, yes, hey, I'm deploying a CPU, I really need to maximize performance out of it. It's different now. You talked about how we should be thinking about the whole system end to end.
Yes.
We are at a point where we have to look about the whole data center and think about it as one integrated system. Servers, hardware, networking, cooling, power, all of that is not optional. All of that has to work together, right? And this is where I think there's a huge opportunity for collaboration with partners like AMD. because you have to now co-design, co-create systems, not just deploy sort of something that comes off the shelf, right? The other thing is, by the way, flexibility. The thing I really liked about what you said is that this is such a big opportunity in the industry right now. All of us need to lean in and sort of work on this together. So it needs to be open. It needs to be heterogeneous. And I think there's no one company, one partner that works for any one of us. We need to sort of work on this together. And that's why I think you're one of our most important strategic partners.
Thank you, Santosh. And look, we completely agree with your philosophy. Now, you are actually one of our broadest partners, because if you think about our work on CPUs, GPUs, we developed the rack scale OCP systems together. You've deployed lots and lots of CPUs, so millions of CPUs, and you're a lead partner on Venice. Can you just talk a little bit about sort of your CPU infrastructure and some of our work together?
Sure. It's been many years. And the story that Lisa was saying was many years ago. I think we went from Milan to Bergamo to Turin, now to Venice. So it's at least the fourth generation. So long time partnership, obviously. I actually think the world is changing in the sense that the world is changing. Every year is a new world these days.
It's like every month.
Months, exactly. So what ends up happening now is that it's not just a GPU game anymore. It's CPUs and GPUs. If anything, I think CPUs are becoming at least as important, if not more. You're looking at a world where sort of the workforce, the workload is changing because while you have your workhorses and GPUs, at the end of the day, there's agentic workloads. You have to run your tools, you have to run your systems, and all the code that's being generated still needs to run somewhere, right? So I'm super excited to work on Venice. I think there's a lot to come there. And you have to think again, this is a theme that I'm assuming will go throughout the presentation, that you have to start thinking about CPUs and GPUs as conjoined things. You hand off workloads. Depending on the workload, you employ the right hardware.
Yes, no, absolutely right. And we've gotten a lot of feedback from your technical team. I think that's what I really appreciate about the partnership with Meta. Now, clearly, you're deploying lots of GPUs too, a lot of accelerators, and you're also one of our deepest partners on the accelerator side, starting with MI300, and then we had a very large strategic partnership announced around up to 6 gigawatts, starting with MI450. And what we're doing is quite unique with Meta. So can you talk a little bit about sort of the evolution and the MI450 plans?
Again, multi-year collaboration. I think we started with MI300. We did a bunch. It had really nice memory capacity. I remember talking to you about that, right? And then there's a bunch of pipelining we did. It was important to sort of deploy that at production scale, sort of get hands-on experience on both sides. 350 is the first time we deployed this on our ranking and recommendation systems. So that's now getting into sort of some good numbers. And 450 is I think I'm super excited about it. We just got some of the racks, and we are going to deploy it across the board because it gives us the opportunity to go and sort of really collaborate. I think the big difference between sort of the 300, 350, and 450 is that we have had engineers sitting in the same room, talking to each other, co-designing, co-creating, like power, cooling. Like I was saying, it's not just a single thing, and we are not shy in feedback. Like
they're not shy, for sure.
But you're very receptive. So this is true partnership, right? This is the point about co-designing and co-creating that I think. And like I was saying, there's a huge sort of deployment coming in. The more we deploy, the earlier we co-design, the better we are.
Yeah, absolutely. Really appreciate the effort together on MI450. Now, I'm going to ask you also about your crystal ball. So you look out into the future and you see, what the next, few years really means as you push forward in the AI industry. What are the biggest challenges and really opportunities for us? This is the industry ecosystem here. So what should we be focused on as an industry?
Listen, all of you know about the bottlenecks. You know about the power, the data centers, the silicon, like all of these, I think, are choke points that I think the industry is sort of waiting on. But those are things I'm pretty confident we'll sort of work our way through. At the end of the day, I think the demand is immense. People are responding. But the thing that I really want to make sure all of us realize is that we should not think about systems in isolations. Like I was saying, CPUs and GPUs are one conjoined system. You should start thinking about it that way. We really need to co-design things early. See, data centers takes years to build. Okay, like one of my favorite stories is Mark comes to me and says, hey, I want a gigawatt worth of data centers. Well, you should have talked to me 2 years ago. It takes time, right? It's the same with silicon, right? It just takes time. So we need to be starting and sitting down in a room, co-designing today for what we need to deploy in 27 and 28. That, I think, is when we truly unlock sort of powers of the system. The systems are amazing. The specs are amazing, right? But think about how much more you can get out of it if you sit in a room and just co-design it today. And then in 28, we'll be having much better graphs out there.
Fantastic. Santosh, I completely agree with you. I want to say again, thank you. We are so, so happy with the amazing partnership that we have, across the board, and most importantly, with your engineering teams. And we truly are excited about what we're going to do in the future. Thank you so much.
Thanks, Adam. Cheers.
Thank you. Thank you. So you heard Santosh talk about just the diversity of workloads and really the massive scale that you require with AI. Now I want to turn to another part of the inference market where the requirements are actually very different. So lots and lots of workloads, and as inference is moving into more products and services, we're actually seeing it segment into different workloads depending on what you're trying to do. Some of these are, let's call it, less interactive. So they're really tuned for, let's call it, maximum throughput or the lowest cost. Other of these applications require more balanced throughput. So you have to balance throughput and responsiveness. And then there's this new class of applications that actually want very, very fast results. You have extremely smart engineers, and they don't like to wait. And that is where ultra low latency, or every millisecond, actually matters. Each one of these types of workloads requires a different type of compute. And one of the best ways to reach ultra low latency today is disaggregated inference. So if you think about the different pieces, both prefill and decode are two different jobs. So prefill tends to need more compute. Decode tends to need more memory bandwidth. And with Instinct, we have a very balanced machine so that we deliver both great compute and great memory bandwidth. But you can actually take this a step further. If you know what workloads you're trying to run, you can actually let customers tune each of these pieces independently. And to address this market opportunity, we've been working with Cerebras. So to talk more about what we're building together, please welcome to the stage Cerebras co-founder and CEO, Andrew Feldman. Andrew, it's great to have you here. It's been an exciting few months for you. I know that for those who don't know exactly what you've been working on, can you talk a little bit about Cerebras and what problem you've been trying to solve?
Sure. Great to be here and great to be sort of among people who love hardware. It's nice. Look, I'm thrilled to be here with you and to announce our cool new partnership. At Cerebras, we build the world's largest and fastest chip. It's a full wafer. And we package this into a system and systems, right, into racks and then racks into clusters. And we deliver them both on-premise and via the cloud. And you've had some of our customers up here already today. On the Frontier Labs, we serve customers like OpenAI. And in the hyperscalers like AWS, in the small agentic and the coding space, leaders like Cognition. And they do this because we're blisteringly fast.
There's no question, Andrew, that you have some tremendous innovation with what you've been working on. And our teams have been collaborating really closely over the last few years to really have Helios together with the wafer scale engine for ultra low latency inference. Can you just educate the audience a little bit? What are we trying to do, and what does that mean for customers?
Sure. I think what's happened, and you described it previously, is that sort of AI has moved from being a novelty to being useful, and then in some domains a necessity. And when something's a necessity, people want to use it and that you want to use it quickly. And to serve this market, this segment of ultra low latency, we sought a partnership that could extend our capabilities and our footprint. And there was no better answer than AMD. We were already an AMD customer as we use AMD CPUs to surround our systems. And we were so excited at the opportunity to build a disaggregated solution that combined AMD CPUs, the cool new Helios rack, and the Cerebrus wafer scale engine.
Yeah, look, the technology is pretty cool. So just talk a little bit about how it comes together.
Sure. So as Lisa described, what you have with Instinct and the Helios rack is you have the leader in performance and memory capacity. And you marry that with our wafer scale engine, which is the leader in SRAM and in memory bandwidth. And that combination allows us to deliver a solution that is unmatched in the industry.
So very, very exciting. I know that customers are excited about what we're going to do together as well. So when are we going to have it in market?
Later this year, and it will be first in the Cerebrus cloud, and it will be later at a store near you.
I think the key thing is we're going to give customers a choice to really put together, what is the solution that they want. And I think we're very, very happy to be able to do this together with you. I think it's a huge step up in terms of what we can do for this ultra low latency segment.
I think that's right. I think until recently, customers they could have high throughput, or they could have extraordinary speed. And by bringing together the Helios rack with the Cerebrus wafer scale engine, we give you 5 times the throughput while continuing to deliver this extraordinary speed. It's really something amazing.
Fantastic. Well, look, Andrew, huge congratulations to what you and the Cerebrus team have done. I mean, I think it's been incredible. I think you've been clear on what you were trying to accomplish, and it's really nice to see not only it come together, but us come together to offer a solution that will be very, very compelling to customers. So we can't wait to get this into customers' hands.
Soon.
Thank you.
Good to see you. Thank you so much.
Thank you, Andrew. All right. So look, I think we've shown you a lot of hardware this morning. But as we all know, hardware is only part of the story. It's actually software that turns all of this into a platform that developers can really build on. So to share the progress we're making with ROCm, please welcome AMD Senior Vice President of AI, Vamsi Bopanna, to the stage.
Thank you, Lisa. Good morning, everyone. It's great to be back to talk about software. Just a few years ago, programming AMD GPUs required deep expertise and significant engineering effort. We've come a long, long way in a remarkably short period of time. Through our open source community collaboration and sustained investment in ROCm, our software stack, AMD Instinct GPUs are powering some of the most important and consequential workloads on the planet. But the biggest change is still ahead of us. AI is transforming how software is getting built. And we are bringing that transformation to ROCm. And that's what I'm excited to share with you guys today. Our software teams have been moving fast with relentless focus on developers. We've invested at every level of the stack in build and test infrastructure so we ship faster. ROCm releases now go out every 6 weeks, not every 4 months. We've continued to expand the work we do with our AI ecosystem partners. And the result? More features, faster performance, and a significantly better out-of-the-box experience. Our strategy that has gotten us here has been remarkably consistent. It's built on 2 core principles. Partner deeply with the open source ecosystem and build with the right layers of abstraction to enable developer productivity. Open source gives us velocity and scale, and abstraction makes developers more productive. Our deep, deep commitment to open source has resonated with the community that has truly embraced AMD. From frameworks and compiler stacks to inference engines and model hubs, AMD is now becoming part of default enablement for the most important AI communities, such as Hugging Face, PyTorch, JAX, VLLM, and SGLang. This is why new models get day zero support and why the world's most important AI workloads run on AMD today. That is a big shift. Inspired by engineers seeking productivity, abstractions have evolved to enable work at the right level of detail, hiding complexity when they want speed, and exposing control when they need performance. From low-level programming in assembly and C to block programming abstractions like Triton to Pythonic frameworks, we've invested in key abstractions. Aether, our kernel library, and Atom, our serving engine, get you peak performance without writing the kernels yourself. FlyDSL is a brand new Pythonic domain-specific language that gives you low-level control with the performance of hand-tuned C++. And Mori, our communications library, helps deliver leadership performance on the latest models like Minimax. But look, something very, very exciting is happening. Over the past year, I've seen something remarkable inside AMD. Our engineers are using AI models to generate GPU kernels, optimize code, debug issues, and improve performance. And in some cases, these AI-generated kernels are shockingly good, better than what we expected, sometimes better than the most manually tuned versions. The first time you see this, you're a little bit skeptical. You run more tests, you try to break it, you look for what went wrong, and then you realize this is real. What has happened in general software development is coming to significantly transform GPU programming. It's going to reduce the time it takes to bring up workloads, make optimization automated, and it will remove any remaining barriers to broad adoption. We want to put that capability in the hands of every developer. So today, I'm excited to introduce ROCm.ai. It's an agentic AI platform that brings the capabilities of AI-assisted GPU programming to developers. It starts with the simple idea of giving developers access to the power of an AMD ecosystem through the AI coding agents they already use. Whether you're using Cursor, Claude, Codex, ROCm.ai helps those agents understand AMD platforms, understand ROCm, and helps you build and optimize your workloads. In other words, we are making those popular coding agents into ROCm super users. You should be able to describe the workload you want to run, the performance target you want to hit, and then let the agents help you get there. For years, we have been building the open software foundation. Now, we are adding an AI-assisted layer that helps developers use that foundation faster and more effectively. So let me show you what is inside ROCm.ai. It's built on the foundational capabilities of ROCm, our core software stack: runtime, libraries, compilers, tools, framework integration, all of the core software that makes the stack work. On top of that, we built a layer of AI-assisted optimization called Hyperloom. Using Hyperloom, the system can analyze a workload, tune configurations, select and tune kernels, adjust parallelism strategies, and iterate towards performance goals. To give you an example of the power of Hyperloom, I was talking to the lead developer last week. He told me they just pushed through a suite of 14,000 models through Hyperloom, optimizing them and creating valuable insights. This would have been impossible to imagine, even with a large team of engineers before. That's the power of Hyperloom. And finally, we provide an AI-native interface for our developers, AI skills that allow coding agents to understand ROCm natively. I'm incredibly excited by what we have built with ROCm.ai. It's going to profoundly transform the way developers interact with our platforms. So let me make this concrete for you with an example. Imagine you're a developer who wants to optimize Minimax M3 with VLLM on MI355s. Today, there are many things you need to get right. You need the right VLLM optimizations, the right model recipes, the right environment variables. You may need to write new kernels or optimize kernels, and then you still need to tune all of this. With ROCm.ai, this interaction becomes much simpler. So let's see it. You can say, optimize Minimax M3 with Hyperloom. Enter. And behind the scenes, the agent does what an expert would do. Pulls a known good recipe, runs and profiles the workload, it creates and tests a bunch of kernel and runtime configurations, and it keeps iterating towards target. You can actually watch on screen here, ROCm.ai write a GPU kernel. It sees an opportunity to write a more optimized MOE group gem. And the result, ROCm.ai delivers a 38% more tokens per second improvement on this specific example. This is the experience we want for developers. Simple to start. That's pretty cool, huh? Simple to start and powerful to optimize. We've continued our relentless focus on performance. With every release, we've delivered significant performance gains. On leading models like DeepSeek, ROCm.ai delivers 3.3 times speed up over ROCm 7. This has been made possible by innovations at every level of the stack. Techniques such as the use of block-scaled fused MOE kernels, KV cache quantization, expert parallelism. But look, the bigger story is how AI agents actually profiled the workload, proposed new kernels, tested configurations, and actually validated all of the results. That exact same focus is also on delivering performance gains for training. On the same hardware, ROCm.ai improves training performance by an average of 2.4 times. Through optimized kernels such as fused flash attention, more efficient checkpointing, and advanced parallelism strategies. Our engineers have done amazing work to unlock the capabilities of MI455 through ROCm.ai. So I'm delighted to share some incredible results on hardware. On running real workloads, we are able to see the system deliver 20 terabytes of memory bandwidth and 20 petaflops of delivered compute. These are the highest demonstrated compute plus memory capabilities of any accelerator platform in the industry today. It's not theoretical, there's measured. Super exciting that we were able to share this on day one. I'm also thrilled to share that the leading AI ecosystem partners who have had their hands on MI455 have had a delightful experience. You can see here what they've had to say, from end-to-end PyTorch testing to ensuring Hugging Face models are getting validated, to VLLM and SGLang running well on MI455. We are incredibly encouraged and excited by what the community is about to unlock with MI455. This matters because day zero readiness is one of the most important objectives we strive for, and that's what ROCm.ai enables. So now let's look at ROCm.ai in action on Helios. This time, we are going to use a Codex front end. Let's deploy DeepSeek V4 Pro, a 1.6 trillion parameter frontier model on Helios. Now watch what happens. ROCm.ai pulls the right recipes, it configures the runtime, it implements the model graph onto hardware, and finally serves up the model. There you go. The model is actually up and running. And let's see the model write a simple poem now about advancing AI. Let's hit enter. Isn't that a pretty cool poem? This is the experience we want to give our users. The developer should not have to manually reason through every layer of model architecture, kernel selection, comms strategy, and rack level deployment. AI is transforming this experience, and that is a very, very big shift for GPU hardware and software. Now, there are few organizations shaping the frontier of AI as much as OpenAI. You heard Lisa and Sachin talk about our partnership. It's been truly wonderful collaborating closely with the OpenAI technical team to make rapid progress with ROCm. To talk about how they are advancing the frontier of software development and our collaboration, I'm delighted to welcome to stage Philippe Tillet from OpenAI. Thank you for joining us here, Philippe. So just so you all know, Philippe is the creator of Triton, one of the most important software innovations in modern AI infrastructure. It's a huge privilege having you here.
Thank you.
OpenAI has always pushed the limits of infrastructure. So, can you tell the team a little bit here today as to how your team actually develops GPU software and how have technologies like Triton evolved?
For sure. Well, first of all, thanks so much for having me. I was here 2 years ago. It's my great pleasure to be back now. Look, a way of looking at things is there's no one way to fit all applications, and we really try to meet users where they are. So for that reason, we've developed multiple solutions. So for workflows where speed of iterations is more important, we've developed Triton, as you mentioned. So this is typically what researchers will use. But more and more, we've been in a case where we've had to hyper-optimize performance, and Triton didn't give us the level of control that we wanted. So we've developed Gluon for that, which is a lower-level language. And this way, we've been really able to optimize our kernels for AMD, among other things. And yeah, like our agents have become extremely good at both of them, and we've worked with AMD on both of them as well. Yeah, and more and more what we're seeing is agents slowly taking over. They're getting just very good, as you just mentioned, at writing this kind of code.
Amazing. So look, I think the work you have done with Triton and now Gluon, right? It's been really, really moving the ball forward for the entire industry. Now, we began our work together with 300 and extended at 350, but now we're collaborating at a different scale with 450 and Helios. So would love to hear your thoughts on how that collaboration has been going and how has that experience been?
Yeah, super well. It feels like ages. I think we started years ago on hardware co-design, when MI450 was like in the very early prototyping stages. I think we're able to work really well together, and it's so nice to see the outcome of that and the chip. And more recently, we've been working very, very deeply on software enablement for MI450, both for our models, but also for the broader ecosystem. So a lot of this development has been done open source. And yeah, we're collaborating on the full stack now, down to the very low level LLVM code generation, so that like all the nice hardware advances that came with MI450 can be properly leveraged, in end-to-end applications.
Yeah, and you got your Helios racks, so tell us a little bit about that.
Yeah, it worked. Like we got the chip, and yeah, we got the chip, and very quickly, like a single engineer in a few days was able to confirm that everything worked. Obviously, like we have to optimize performance more, but we're very confident we can get in a very, very good place.
Awesome. That's awesome to hear. So look, one of the more amazing things that we've done recently, right, is our teams have collaborated even more closely in terms of, using AI to program AMD GPUs. So, would love to hear your thoughts and anything you can share with the audience.
Yeah, no, I mean, everyone in this room knows how much agents are taking over our jobs, in a sense, as kernel engineers. And it's been amazing just to see like how much better they've got over just the past 6 months. And just now they're extremely good at generating just high quality GPU kernels in a way that we're not before. And it's been very great collaborating with AMD on just like making sure that agents not only are capable enough, but also have all the right context they need to be able to make good decisions and good optimizations.
That's great to hear. Yeah, I think the quality of code that's getting produced by AI-assisted kernel generation has been truly remarkable through our collaboration. Yeah. Very excited. Now, as you look ahead, right, what crystal ball do you have for us for the future of AI software ecosystem and collaborations like ours?
Yeah, so there's two things that really come to mind. One, as we keep talking, is just how good agents are getting. And the other one is, I think, how much the open approach to software of AMD is enabling, not only for OpenAI, but I think for the industry as a whole. I talked a little bit earlier how we've been collaborating on LLVM code generation. LLVM is an open source project. the entire compiler stack from AMD is open source, and that has allowed us to make our agents really good at very, very low-level code generation, down to scheduling instructions in assembly, and this has led to like very, very significant performance gain that I don't think would have been able to achieve in a fully closed source stack.
Yeah, that's one of the real sort of big value propositions that we have to offer, right? Because everything that we do is in the open, and the fact that AI can actually pick that up is a big one.
Yeah.
Thank you, Philippe. We truly appreciate the partnership, and we're really excited about what we're going to build together.
Yeah, my pleasure. Thank you so much for having me.
What you just heard is extremely important. When we combine better abstractions with AI-assisted development and close hardware-software co-design, we can create some incredibly powerful capabilities. And that's exactly aligned with our strategy. Now, everything I've shown you so far has been about AI, but ROCm is also a great stack for developing high-performance and scientific computing applications. From frontier models to climate simulation, we use the same ROCm, the same library, same tools, same AI-assisted development, one open stack for every single workload. And in fact, when you look at our roadmap, we've retained that very strong focus on HPC and scientific computing. Just like MI455 leads in AI compute with FP4 and memory performance, MI430X leads HPC compute with FP64 and memory performance. Two platforms purpose-built for two very different classes of workload. The MI430X is built by leveraging our modular chiplet architecture to deliver a purpose-built variant with native FP64 hardware, giving customers leadership performance across AI and HPC in a single platform. And this is hardware double precision, not emulation. For the scientific community, that distinction is everything. This product delivers 288 teraflops of FP64 compute, nearly 9 times better than competition, and the same leadership, memory capacity, and bandwidth of MI455. The MI430X ships in the first half of 2027. This is why leaders in sovereign AI love this product. The first sovereign exascale AI factories in both US and Europe are being built on the MI430X. Discovery at Oak Ridge National Labs, and Alice Ricoh with CNES and GenC in Europe. So look, as we look ahead, let me leave you with this thought. Every so often, our industry goes through inflection points. We've all felt it when neural networks first started recognizing cats and dogs, when transformers changed what was possible with AI. I believe we are experiencing another one right now, a real inflection in the ability of AI to program complex hardware systems. Building on the surface area that's been exposed from open source software and leveraging the power of abstracted interfaces, AI is making it dramatically easier to program AI systems. We cannot wait what you will build with it. Thank you. Now, AI is getting pervasively infused into all forms of computing. Enterprises are experiencing the same shift with their own unique requirements. So to tell us more about that transformation, please welcome to stage Senior Vice President and General Manager of Compute and Enterprise AI, Dan McNamara.
Thank you, Vamsi, and good morning, everyone. It is a great pleasure for me to bring to you the third pillar of our strategy, which is powering AI everywhere. And you know, the vision behind this has remained the same for several years for us, you know, to deliver the right compute engine to the right workload, and then continuously drive optimization points across our entire portfolio, from CPUs, GPUs, networking, and FPGAs. So building on what we've already shared, I'll cover how our strategy comes together across our enterprise portfolio and how the foundation we built with the CPU franchise has truly positioned us for the next era of AI across multiple deployment models. So Lisa talked about the frontier model and hyperscale landscape and just the rapid and massive advances we've seen over the last 6 to 12 months. And those advances are driving the adoption of AI well beyond the cloud. And as AI continues to grow, it will demand compute beyond the massive purpose-built data centers that we all know and love, extending into enterprise, personal, and physical AI. And each of these brings a new or unique set of requirements. Enterprises are usually constrained by power and cooling. Personal AI usually must operate within a fairly limited compute and memory footprint. And physical AI must perform reliably in real-world demanding environments. And AMD is the only company delivering a complete portfolio that spans all of these development models. So I just mentioned that our journey began in the data center with our CPU franchise, and I want to touch on it a bit. With each generation of EPYC, our strategy has been to listen to our customers, address their evolving needs, and deliver the highest performance, lowest total cost of ownership, and the fastest time to value. As Lisa mentioned earlier, we've introduced many industry firsts across our generations that our enterprise customers has actually asked for. And that customer focus has brought us to where we are today, with EPYC as the leader in enterprise computing. And over the last 3 years, there's been very, very strong adoption across the enterprise, with the world's largest companies moving more and more workloads to AMD. And it's reflected in a number of places. First, public cloud, where our VM consumption has grown at 76% CAGR over the last 3 years. And our on-prem deployments with our OEM and ODM partners is growing quite aggressively across key industries. But just as important, this position allows us to understand truly the diversity of the workloads that our enterprise customers run every day. And each workload places new demands on the CPU. Some require a maximum thread count, some depend on per core performance, while others depend on memory bandwidth, cache efficiency, or I/O performance. The really important point is that there is no single SKU that solves every enterprise application. And that's why our EPYC portfolio with Venice spans 8 to 256 cores with a range of power, frequencies, and I/O capabilities, giving customers the flexibility to choose the right solution for their workload, and most importantly, at the most optimized cost. So Lisa mentioned this earlier, and now we all know we covered Venice, and she showed how we have strong leadership across AI host nodes and the agentic workflows. But I wanted to show you how Venice actually leads across the general purpose workloads of the enterprise, and these workloads that are running, our customers rely on every day. As you can see, we have a minimum of 2.5x the performance across our competition, across these very, very important enterprise workloads. So now, as we all know, agentic AI is really the next major transition for the enterprise. And it truly is a force multiplier for enterprises. And adoption is accelerating. In fact, the latest data here shows that nearly every enterprise next year will have some form of agentic deployments. And as enterprises move from pilots to production deployments, we've talked to CIOs all the time, and they are looking at 3 major things. First, predictable infrastructure cost and token costs. Secondly, making sure the data is secure. And then lastly, and sometimes this is overlooked, right? Integrating AI into their existing infrastructure. It's not all greenfield out there for the enterprise customer. So,
really quick, we have a pretty busy schedule for the rest of the day. AMD also has a 3:30 Q&A for investors. I'm thinking, and I wanted to watch that, but I also have to get through the Google review. There's a lot of stories happening in the background right now that I think I'm missing. And then we also have an interview coming on at 2:45. So with the guest coming on and the conversation that I want to do around Google, that might be around 20 to 30 minutes. We might have to wrap it up soon. I was expecting around a 2 o'clock ending. Let me know what you guys think. Please vote on YouTube.
Constraints. First and foremost, power, cooling. Really big challenge in space. And of course, costs remain top of the list for CIOs that are trying to, drive things forward with an AI in the AI world. And then lastly, the full solutions they need to be easy to deploy. That's been common for many, many years for the enterprise, but that's something we're very, very focused on. So to address these constraints, thank you, Laura. I'm very happy to announce the launch of the Instinct MI350P. So today, every enterprise wants AI.
That sounds great. A new NVIDIA chip to round it out. We'll be doing the Q&A right here on this live stream. We're not switching it out or anything, but I want to make sure that we do get around to some of the conversations in the market. And as Steve said in chat earlier, the vote really doesn't matter. This is a dictatorship. So Tesla down 14.2%. Google down 6.5%. Both of these companies just ended up showing off their earnings. Amazon down 4%. Even AMD, which I think that this has been a great presentation so far. A lot of this has sort of been already expected. I don't think many people expected this Cerebras story, or at least I didn't. But I did think that that was a really good comeback versus what obviously NVIDIA is doing with their LPU system or their LPX system with Grok, right? And Grok, I mean, GKOQ, right? Or GROQ, sorry, not GKOQ. GROQ. So with the new Grok system, which is really focused on inference, so is Cerebras, but they're a standalone company. It really reminded me of Mercado Libre, which is sort of like an e-commerce platform and a fintech. What Nubank did was they ended up partnering with Amazon, so then they can put two amazing businesses together to fight against a company that has both of them under one roof. So the stock is still down roughly 3.3%. I don't think this is too much on the actual news that's being reported. We saw higher than expected CAGRs in terms of the total addressable market there, right? For both CPU and AI accelerator TAMs. And then new partnerships and, they're in full production with the MI 450s. So, or 455. So everything looks fine to me. I'm no AMD expert or anything like this, but yeah, I'm sure there will be news stories by the end of the day, and hopefully we'll see more of the investor-focused commentary at the next live stream. Okay. We also saw oil, and this is still spiking up, mind you. Actually, a little bit worrisome at this point. Oil is now back above $93 a barrel. If we were to go back roughly a month, oil ended up dropping down to about $68 a barrel, $67 a barrel, now climbing all the way back up. And in the most recent day, we're already seeing roughly a 7.4, almost 7.5% increase on the day. That's going to be really, really bad for rate expectations. We can even see that here. The new chance of a rate hike by the end of the year. So this is the final meet on December 9th for the Federal Reserve, is now at a 93% chance of a hike, 7% chance of no change, which many companies are guiding for no change, and an absolute 0% chance of an ease right now. It doesn't mean that we can't get an ease by the end of the year. The rates have changed with new information that's come out, but based on the information that we have today, it's pointing towards a hike. A lot of that is inflationary concerns, and obviously oil doesn't help at all. A lot of this is coming about with new comments that the United States is striking Iran again, and potentially those sort of conflict issues might be arising. We don't want to see that at all, right? Like, if we end up seeing conflicts arise, that means that we could go back into a Strait of Hormuz block, oil prices end up going back up, strategic petroleum reserves end up getting down to scarily low levels, which, I mean, we pretty much already are at. And And then the market gets really concerned that conflicts can escalate into worse and worse wars, like if China has a problem with what's going on with Iran, or there's other potential countries that want to get involved, especially in the Middle East or elsewhere. It just can compound if conflicts continue to get worse. So not super happy right now. The market is definitely not taking this lightly. The NASDAQ is down 2.36% and the S&P 500 down 1.4%. It's a pretty decent drop. Any individual name can drop a lot more than that, but whenever the entire S&P 500 drops like this, that's whenever you have to start looking into where the problems are. So let's go ahead and take a look at US and then, heat map here. Yeah, oil and gas companies doing okay, drug manufacturers, aerospace and defense, but for the most part, red across the board. Red, 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 red. Okay, but I really came to talk about Google. I got a little apple in my teeth. 1 second. Okay, I'm good now. Watch me stick my hand into my mouth before I talk about Google. Let me get up the stock price really quick. It's down 6.5%. Earlier is down 7.5% whenever I took this screenshot, so I apologize, but let's go ahead and quickly do a Google review, and I've created a presentation here for you guys to talk about it. All right? So, Google ended up showing off their earnings yesterday, and we ended up seeing some pretty spectacular things, but the market is not actually appreciating this. At the time that I took this screenshot, we're down 7.5%, but currently the stock's actually down around 6.5%. We're still obviously down a lot versus where we were in the after hours at roughly $353. Now we're sitting at around less than $320. Even though we ended up seeing total revenue for Google surpass $119.8 billion in revenue, up 24%, some of the fastest growth rates that we've seen in multiple years. Okay. On top of that, we ended up seeing gross profit hit a brand new high of roughly $73.8 billion, 61.6% margins. Extremely, extremely high, especially whenever you're talking about doing this on $73 billion. Okay. But then we need to talk about consolidated net income. And in fact, I wanted to look at operating profit as well. It was roughly about $40 billion, and margins were improving as well. But that doesn't really line up with why net income is spiking up so much. The last 2 quarters have been extreme anomalies. We ended up, putting up roughly $62 billion last quarter, and then $112 billion this quarter, which beat estimates by like 200%. But essentially, it was the fact that they ended up talking about putting a stake on SpaceX. This was a long time ago. That's up roughly like 180 times. So that $94 billion holding, along with their holdings in Anthropic and many other companies that have done well in this AI boom, has led them to add non-operating income of roughly 97.98, let's just say $98 billion onto that net income. So if you actually take a look at their net income versus how much they put in non-operating income, you actually get to roughly about $14 billion in net income if that wasn't part of it as well. So, even other quarters, you still do see, without SpaceX IPOing, non-operating income pop up all the time. But these are massive anomalies. If you end up looking at the actual taxes that they ended up paying, that also spiked up. So this was sort of the difference in the operating profit versus what actually we saw for net income. They paid $26.5 billion in taxes. So very, very big tax quarter. But it is helping them lock in $112 billion of gains this quarter. On cash and cash equivalents, this one actually surprised me because we're going to go in to talk about how much they actually have been spending on CapEx and building out data centers. But what we ended up seeing is that they now have roughly $55.9 billion in cash and cash equivalents, and that does not include short-term investments. This is purely cash, okay? On top of that, I wanted to break down some of the revenue segments. So Google search, for example, ended up still seeing an increase of roughly 16.7%, or 63 billion of their total amount of revenue came from this segment alone. This was highlighted by two different metrics. One, the amount of overall ads that were actually given to Google search users, up 13%, and then the price that people were willing to pay on the Google ecosystem for Google ads also increased by 3% year over year. The amount that they're increasing by is decreasing a little bit, but it's still growth rate. It's just, decelerating growth rate, but it makes up for it with the large amount of new ads that were overall served. So Google, search business will continue to do better even if they have the same amount of users. Now, they also came out and said, this quarter, we reduced the cost of AI mode responses at the lowest level since launch. Sorry, we reduced the cost of AI mode responses to the lowest level since launch. Even as we have brought more advanced AI capabilities, Philip, we also want to talk about how we're innovating the AI. Dude, I butchered that entire thing. The problem was my camera was in the middle of my screen, so I had to look over to the recording screen, and then I'd lose the line that I was reading on. Anyway, Philip will also talk about how we're innovating the ads experience. But essentially, what they're trying to say here is that the AI mode responses are at the lowest level since launch. They're getting better at serving up that AI mode, which is essentially Gemini in search. On top of that, we have YouTube. Now, YouTube has been in this overall sort of declining trend of growth. Now, if you look at the overall revenue, it's continuing to climb, but we want it to grow at those high teens rates. Now, whenever it got down to roughly 8.7%, that was not a great sign. That is starting to recover now, and hopefully that continues to recover. But Google Ads business is roughly up about 12.8%. One of the interesting parts about Google's ad business is this is actually not the entire YouTube. This is not the entire YouTube ads business. You also have subscriptions like premium services where people are paying that falls under subscriptions, devices, and platforms. But that does not show up here. So they don't just show YouTube's entire advertising. And I've seen a lot of people who end up signing up for YouTube Premium that actually makes YouTube's ads business grow much slower. And then, of course, we need to talk about by far the most important part, which is Google Cloud. Google Cloud is up 81.8% in their overall Google Cloud revenue to $24.7 billion. Now, there's a couple different ways that we'll break this out, but essentially one of the ways that Altimeter Capital, this is Brad Gerstner's company, ended up doing it, was looking at the net new ARR added to Google Cloud, which now it just spiked up to nearly $19 billion added quarter over quarter, which is roughly twice as high as what it was the quarter before. Okay. And whenever you look previously, they've been able to add on $1, $2 billion, $3 billion, $4 billion. Spiking that up to $19 billion is going to require a lot more capital because you need to set up those data centers. Yet, although we're end up seeing this massive improvement in overall amount of growth, they're doing this at better margins, which came at a massive surprise to many investors. The operating margin on Google Cloud has gone from 3% 3 years ago to 35% in 3 years. Every single quarter has been better than the last. Now, they did say that that might not continue to happen going forward, okay? However, oh, wait, is that out of order? Whatever. I'll talk about it in a second. They also said that part of this Google Cloud revenue was actually selling TPUs. I think that once this gets to scale, they'll break this out into their own revenue line. But for now, it's under Google Cloud, which I think is appropriate regardless. But some of this is being seen as TPU sales, and it's really going to be a lot of revenue overall being realized in 2027. So although there's this 81.8% ramp, a lot of people are going, yeah, but it's outside of Google Cloud. We're also looking at hardware sales and these sort of things. That makes up for a small percentage of what it's going to be going forward. They also talked about some of that, Google Cloud revenue also being Wiz revenue. This was one of their recent acquisitions, like a $33 billion acquisition for a cybersecurity cloud platform name, where they said that they have seen more than 45% quarter over quarter increase in the number of AI workloads scanned and protected by our security platform. this is not just for Google Cloud. This goes across Microsoft Azure, AWS, and many other clouds as well. Wiz is agnostic to the cloud platforms, but the growth is extreme here. And we didn't really get to see this before whenever Wiz was a private company, but now that it's under Google, we get to start to see some of these numbers, and 45% quarter-over-quarter increases is really exciting. Now, a lot of that actually has to do with the backlog as well. As we continue to scale up, we're not only growing by 81%, but what's to come next is higher than ever. A lot of the time, whenever you bookmark that 81% growth, you're going to be eating into this backlog, but it's actually expanding. So whenever you talk about supply and demand imbalances, it's actually gotten wider for Google quarter over quarter than it was, back whenever we were at $467 billion. So they still can't keep up with demand, and it's actually gotten worse than where we were a year ago, a quarter ago, wherever. So they said, given that supply constraint environment, we plan to expand to use third-party capacity in Q3 as a bridging strategy while we build out more internal capacity. This strategy allows us to keep growing our customer base and capture greater overall value. Now, I really wanted to highlight this because this was going to the sort of operating margin conversation that I said earlier. They did say that operating margin might end up taking a big hit because they're going to be giving, massive payments to companies like SpaceX and potentially IREN or Nebius or CoreWeave or Nscale or whatever company that they end up partnering with. But, this sort of bridging strategy goes to talk about, like, if you partner with these businesses, Nebius, CoreWeave, some of these are 5-year deals. They're not going to be doing very small deals. I mean, they might, like they did with, SpaceX, 3-month deals. It's not super big, but they signed, I think it was a 30-month total contract. So these bridges can actually be very long before you can build that capacity. And there could be a potential for some of these Neoclouds to really benefit from Google seeing a $514 billion backlog and really want to try to get through some of that demand. But this is going to cost a lot of money, and that brings us to capital expenditures. First up, with a lot of their money that's outflowing from the business, we end up seeing buybacks essentially come to a complete stop. The last 2 quarters, they've given nothing back to purchase back common shares of the business. They used to do about $15 to $16 billion a quarter, but they have not ceased to continue to pay and also increase their overall dividend. So dividends are still coming up. Now, cash from operating activities was a little bit shy from where we were, in the quarters before. But if you look year over year, it was only $27 billion. Now it was $39 billion. So there still is a large increase there. But they ended up spending $44.9 or $45 billion on new data centers, new offices, and essentially capital expenditures, right? This is going to bring down free cash flow. They said, we are both very committed and very confident at being at the frontier. For the next generation of frontier, you are going to need much larger base models. We are now training Gemini 4, and we're being very ambitious with it. I'm very excited by the progress I'm seeing internally on Gemini 4, but like they said, this is going to need way bigger training operations, a lot more spend. So get used to spending this, $44 billion, $45 billion. In fact, raise it even higher than what you thought previously. They are now raising their CapEx guidance to a range of $195 to $205 billion, or let's just round it to $200 billion. That would mean on a per quarter basis, we need to spend at least $50 billion in order to get, to this total CapEx guidance. We did not just spend $50 billion. So there's going to be a quarter that comes in the rest of the year that's even higher than this one. Up from our previous estimate, which they gave 3 months ago, for $180 to $190 billion. This increase is in the range is primarily due to an acceleration in the delivery of capacity to meet growing demand. So they're not blaming it on memory. They're not blaming it on cost of energy. They're not blaming it on anything like this. They're just saying, we want to run faster, so we're going to spend more. They also came out and said, as previously shared, we expect our CapEx to increase significantly in 2027, and we'll provide more details at a later date. UBS and JP Morgan came out and said that 2027 might be in the range of $325 to $375 billion in CapEx. So essentially, you know, almost a 70% increase year over year, again, going from full year 2026 to full year 2027. So you look to companies like AMD, Broadcom, NVIDIA, there's going to be so much more spend on whether it's Neoclouds or the actual chips or the networking or the photonics. The build out is looking to continue to happen because Google has these very secure backlogs that they feel confident that their customers will come and pay. Now, that brings us to free cash flow. Free cash flow was negative for the first time since like 2003, down $5.8 billion. It's pretty stark contrast to where the average Google investor is used to trading this company, you know, being very cash flow positive, bringing in more money. But I honestly think that this is going to be a different focus for Google, and they're going all in on artificial intelligence. They see a massive amount of spend and a large amount of capital expenditure that's needed to be a top player in who is going to actually offer, you know, this data centers to OpenAI, Anthropic, to their own internal compute, to Grok, to Meta, who knows? But they want to be a frontier data center player and model provider. That's going to need a lot of money. The interesting part is I don't think that they're going to be alone. Microsoft, Amazon, all of these companies, they're down today because I think people are realizing that they're also going to come out and have higher than expected CapEx guidance. Anyway, it feels like we are in very early innings of what feels like a secular shift across multiple areas. In our core information business, just the possibilities when I see, I'm reading across two different things here. I'm just going to restart. It feels like we are in very early innings of what feels like a secular shift across multiple areas in our core information businesses. Just the possibilities when I see what all we can do with the absolute frontier capabilities, there's still a lot of work ahead to translate all of that into experiences for our consumer users. We are still very early innings. A secular shift across multiple areas. Just insane. Google's Rule of 40 has also hit another new high for a multi-year high at 64%, off from 63% a quarter before. Okay. If you want growth and growth that companies are willing to pay for, this is like where I love to invest. Companies that really see an opportunity and are spending to go capture it. Google is doing that. They're not being safe. Okay. They don't want to lose their advantage. They're willing to fight to win. And that's why we're seeing increased growth and increased margin as well on the same time. On top of that, they're also investing in robotaxis with Waymo and in drones with Wing and quantum and XR glasses. And there's so many other areas that Google competes in. So the fact that they're also doing well with these, putting out new models or delivering over 1 million home deliveries with Wing, it just makes you realize that the avenues for success on Google is way more than, 99% of businesses that are out there. But then that brings us to valuation, because today it is down 7%, and they just ended up putting up an extreme amount of earnings based on SpaceX's new valuation, but that's real money for them. They'll likely sell off that SpaceX, holding that they have worth $94 billion, and then put that all back into data centers to increase cloud growth. So the PE ratio ended up dropping down to 15 times, or roughly 16 times, and the forward PE is now sitting at 23.7 times, which is not based on the mark-to-market gains of SpaceX. A forward PE of under 24 times, that does not include mark-to-market gains. That's very real. Anyway, guys, that was a little bit of a review for Google. I still love this name. The market hates the spend, but obviously with my portfolio being extremely infrastructure or AI infrastructure dependent, I obviously knew a lot of this spend was going to come and likely to happen in 2027. And then, surprise investors in 2028 that it's even higher than that. That's my hope. But on the other side, my belief is that consumers and enterprises are going to be willing to pay Google for these services. So they're happy to pay NVIDIA if they know on the other end that their consumers are paying for Google One or Gemini or tokens on a per use basis. Whatever that ends up coming out to be, if they have customers to pay for it and margins are improving, they're going to be willing to put more money into it for next year. Anyway, let me know what you guys think about Google, and are you buying here? Is this a buying opportunity or something where you're selling? Okay, let's jump into where is it? NVIDIA is actually down today, which is wild. Down 1.6% on the fact that maybe AMD has shocked some users or something. I don't know. But the fact that this is down on Google spending more is nuts. I don't know. I think that's a little bit surprising to me. Oh, I also need to send out the StreamYard. I've got a guest joining here in the next 15 minutes or so. Okay. Cool. Is it hot, Steve? It's not hot, Steve. I got to get Steve on here, though. I think this person has been on the stream before, but it's been a while. It's been a long time. Everything is down on rates and oil, but still it's like, and I know NVIDIA's not down a lot. That's why I'm not worried about this. We're still above $200 or something, but I think the important part is that what you're actually seeing is that NVIDIA is going to see more of that spend, and that's likely to continue even past these war efforts. And that Google is not going to stop building data centers based on oil price. I mean, for the most part. There definitely can be a slowdown in builds with CoreWeave and Oracle and many of these companies that are taking out lots of debt if we see higher and higher rates. You know, Nebius, the recent debt that they just took out was based on the secured overnight financing rates. So if those rates end up going up, then, you know, they're going to have to pay more. In a terrible, terrible environment, it could get to a place where they're no longer profitable on a, you know, unit economic basis. But I'm not sure that's what's going to happen. I still believe, just structurally, and everyone continues to freak out about this, but that Trump is very responsive to stock markets, stock market pricing, and on I don't know what the right word is, not likability, but like approval rates. That would be it. So if the stock market continues to crash, you'll end up seeing him potentially come to the table to look to negotiate once again, and then, you know, brag about how oil prices are coming down once again. Even though he brought them up, he will definitely enjoy the fact that it's coming down. Do a poll to guess the guest? Yeah, but then I'd have to say who the guest is. It would be like one of the four. Trump is live right now? Okay. All right, all right. Let's see here. Yeah, the top conversation still, I don't know if there was another thing with Bill McDermott, but I did really want to hear what he had to say after earnings. I guess the earnings call it is in itself, you know, a lot of his commentary, but I wanted to see if he had, yeah, there's only the 1 minute interview. Why is that? Okay. Listen to the first 10 minutes of the earnings call. He's in a flow state. I mean, if you guys want to do that, but I'm sure most of you guys have already heard it. So I will do that, but I'll save you guys the trouble. President Trump did just say that he'll be talking about artificial intelligence with Xi. President Xi is coming on September 24th. So that'll be a big update. We also have AMD's next call, their analyst Q&A, is on at 3:30. So be ready for that as well. Okay. AMD's Lisa Su said that by the end of the decade, the AI accelerator market is going to approach the size of the entire semiconductor market today. Isn't that wild? And we're just selling off SMH right now. SMH down 1.4% on that. Okay. You can do a Google summary of the call, find the best parts. SpaceX is green? SpaceX is green. Volatility index is the most green thing today. A lot of the Neoclouds are going to be really green. Cipher Digital is up 6%. Him and Hers is up 5.4. It's not a Neocloud, but you know, who knows what's the next company to pivot. We saw a shoe company. Will it be a hair loss and ED company next that starts building data centers? Okay, next decade up 4.8%. Let's check the stock draft. I'm sure Matt is doing well. Yeah, man, it's an absolute freaking bloodbath in the stock draft. So we do this game called the Stock Combine or Stock Draft or whatever. This is season 2. Matt is leading the charge right now, up 2.3%. I'm down 1.9%. Steve down 9.3%. Amit down almost 13%. Chris almost down 13%. And Jason down 14.4%. It is crazy. What was the shoe company name? It was Bird. What was it called? Not Big Bird. Why am I getting this wrong? I just want to say Bird AI, but I'm looking for the shoe name. Allbirds. Allbirds. Thank you. Now they're Smart Bird. Yeah, but Allbirds was a shoe company. Yeah. Not Bird Dog. And by the way, the most green position right now is VG. Matt's VG position, which is going to be doing so well because oil prices are going up. It's up another 3% today. One Stop Systems is up 2.5%. Kratos Defense up 2.7%. There was also a report that the U.S. House passed that roughly, I think it was a $1.2 trillion Defense Authorization Act, authorizing nearly a 30% increase in defense spending. So Kratos, obviously the Lockheeds and the Raytheons and stuff like this, but Palantir as well as sort of the software pick of that list. I can't believe that's red. Like you see ServiceNow and you still sell off Palantir? How does that work? Are those daily or year to date? Neither. We started the draft, I think, like, what was it? June 20th or something? Something like that. Or it was off the close of June 18th or, yeah. Tanner, give me money so I can buy more. No, I was really hoping you were going to do that for me, bro. I've got no cash. I'm sitting here just staring at the positions that I already have. I was really hoping that after Google, NVIDIA would run based on increased CapEx. But here I am broker than I was yesterday. But I'm not Tesla broke right now. I'm kidding. I'm sorry, guys. Tesla down 14.1%. You know what? I think Optimus is. I'm optimistic about Optimus. You know what I worry about though? About some of the Tesla stuff though on the robotaxi side. Do you think that there's going to be a price war? Like I just saw here's the example that I'll talk about. I use Whoop, right? Tracks all my running and everything like this, but there's a subscription cost and it's way too expensive for what it actually is. And they charge me like $300 a year or something like this. It's like ridiculous. But I want the best, and I wanted to track all my information. But once you track all that information, if there's a competitor that can come and match that, it's hard to bring up your services even further because there's a little bit of a cap on, how fast you're running and what your heart rate is. Like, it's harder to get better and better at this. So Google ended up putting out their version to compete with Whoop. And it looked really great, much, much cheaper, like $99 a year. Garmin then came out, what was this, yesterday? And is now competing against Whoop, offering a $200 band, 0 subscription. Looks identical. And Garmin's a very, very real name. Will be able to compete closely with that. But, that might end up making me switch because, Garmin's a great competitor. And I just hated the battery life and stuff. The reason why I bring this up versus my Tesla conversation is there's been a massive amount of competition whenever it comes to like NVIDIA Alpamayo and Mercedes-Benz and GM and Ford and all of these companies that are working on full self-driving. Do you think that there's going to get to a place where they can offer self-driving as well, and they're not going to be charging $99 a month, right? And that the unit economics that many analysts are trying to price in for robotaxi or for, self-driving, like for your own vehicle, is essentially going to get competed away because the end goal is, once you have a completely safe car, it's harder to get any better than that. You're going to be talking about, who has the nicer leather chairs or who has heated or cooling seats or something like this. But past that, it's like, it's harder to make it better and better. Let me know in the comments, but I would actually like to ask potential special guest of mine if he's ready. Let me know with a little thumbs up. I can see you, but okay. He's brushing me off. Okay, I'll stick to the time. All right. Garmin watches are great, super popular in the military. The only reason why I didn't like Garmin watches is the screen. I hate the screen. I actually love the Whoop look just because it's just a band, and when I want, I'll check my information on my phone. So yeah, if they can compete with the design. The only other thing that I really like about the Whoop, I never take it off. The charger, sorry, I'm getting a little off topic here, but the charger is this little thing that just slides directly on and then it wirelessly charges. And it's so nice. So I can continue to do my exercises and all of this stuff and charge back to full. And then it's got like a 2-week battery life. So I have to do that once every 2 weeks. But I never, ever take the band off. It's the best. Anyway, that company's about to IPO, so there's their free advertising. They don't pay me. Dang it. Okay. Tanner, are you in Zeta yet? No, I don't have a share or any stake in Zeta. It does look pretty interesting, and the recent, deals with Palantir look very interesting. They talked about an accumulative, or I think it was like $100 million worth of revenue that they wanted to add on. That seems quite interesting to me, but obviously, yeah. Tanner's wrist smell? No. No, you bring it in, you just massage the soap into it, and you can you clean it. It smells amazing. It smells like soap. Don't be weirdos. Okay. All right. I'm going to blow my nose really quick, and then I'm going to let my guest on. Give me one quick second. One of these times I'm going to come up with a bunch of, actually, you know what? Never mind. Casey's streaming. I won't be inappropriate. Ladies and gentlemen, welcome the great and powerful and solid.
The powerful on a day like today, definitely not the powerful.
No one's feeling powerful today. Yeah.
Getting slaughtered for sure right now.
Yeah.
Not
yeah.
a fun day.
How are you?
I'm doing pretty good. I mean, can't say that it's been the best last few weeks. I mean, things are certainly getting busy, but in light of everything that's happening in the market, year's been pretty good. So a little bit of give back, not a big deal.
Yeah. Exactly. What did you just end up seeing Google and ServiceNow earnings and all those companies?
Yeah. I mean, whew. First of all, kind of figured that today ServiceNow is going to sell off its gains. Not because like the earnings were bad. The earnings are actually really good.
Yeah.
It's just a day like today, like there's no way it's going to sustain its earnings or sustain its earnings gap up. Also, I don't know. I think the market just likes to sell off ServiceNow gains. Like this happens almost every single time with ServiceNow, especially a lot of software stocks. As soon as the market opens, it dumps it. I mean, the thing basically went red before the market like went deep red, but obviously the market gapped down. So that's what happens. But on a fundamental basis, those are actually pretty good earnings. Besides the gross margin contractions, or not, I don't think those are gross margins. I forget which margins it was off the top of my head. But besides that, it was actually really good earnings. $1 billion ACV or annual contract value, in addition to renewal rates still around 98%. Good earnings, but again, a day like today, probably not the best day to expect a gap up to sustain itself.
Are you surprised by, like, I was just talking about Palantir. I'm surprised that that company's even selling off.
Yeah. I mean, it's software, right? So Microsoft is down dramatically. You're going to have that bring the entire market down. IGV is pretty deep red.
But why is that? I feel like ServiceNow just disproved this.
They disproved it. But at the end of the year, when you have the 10-year near 5-year highs or the 10-year yields near 5-year highs, that's going to put a lot of pressure on these software companies, especially since they do, not all of them do, but a lot of their investments are somewhat correlated with yields, right? Or bonds.
Sure.
So if we get the 10-year yield to come down, that's actually historically bullish for software stocks, which really hasn't been the case this year so far. But all of tech is selling off today. So you can kind of expect it. The fact that software is down more than semiconductors kind of makes sense to me, because at the end of the day, all this heightened CapEx is definitely benefiting semiconductors more on the earnings growth versus software, right? So I think the only argument we could have right now is that these software stocks are getting brutalized, even though the fundamentals are improving. They're getting very cheap, but the market doesn't really issue premium on stocks because they're cheap, right? They issue it based on the entire sector move. And I mean, right now it's literally not a good day for software stocks at all today. I think almost all the software stocks are down today. Like Microsoft is pretty down. If Microsoft is down that much, then it's probably not looking good. IBM earnings were decent, but I think they already priced in that move before when they had their preliminary earnings. But yeah, someone mentioned quantum in there. That's definitely not a good place to be right now.
What about Tesla?
Dude, so Tesla, I was never someone to be like, this stock is getting cheap or the valuations is crazy. Like since when has Tesla ever traded in correlation to its valuation? Like it hasn't in a long time. Like its PE is ridiculous. It's burning cash left and right. Only $1 billion worth of net income against like probably the lowest margins ever. Like, I mean, you know, you're basically betting on the future when it comes to this. And it's so funny right now. It's like Tesla's down like 14% today. 14% now.
Yeah.
And all of a sudden it's like, oh, Elon with his timelines, you know, this. Like, guys, come on. Like this isn't why it's selling off. It's selling off because the entire market is bearish on CapEx and the yields going higher. It's bearish because everything is down right now, right? And Tesla's a mega cap. So, you know, that's just going to weigh it down. Okay, I thought it was funny because I saw that they didn't change it last quarter because I was looking at previous earnings for the Tesla Roadster status, and it's in design development, right? So it's been like that for the last few quarters, maybe more than a year.
Yeah, more than a year.
Yeah, 7 years ago, it was still in development. So they're no longer in development anymore. I guess they technically moved backwards because now they're in design development. That's basically never going to happen. I don't think that's ever going to happen. It was good news, seeing the timeline for the semi on there, also seeing those delivery numbers, but like there was really nothing in the earnings I can be like, holy cow, Tesla's a great deal right now. Like, nah, I think I would only buy Tesla if it made sense for like a very short-term trade, or if it's a time when like no one wants to own Tesla and the market is, kind of teetering, whatever. But I probably would not buy Tesla for a short-term trade here. I don't even know for a long-term investment over here. Like the best time to buy Tesla is when no one wants to own Tesla. I think we're getting there. I think we're getting close to there, but I don't think now's a great time to buy Tesla right now.
Yeah, I mean, I think during the call, he really talked about how hard of a problem building Optimus is going to be and how much longer it's going to take than some estimates out there. Yeah. And I feel like it's just another one of those things where the timeline between where we are today and when we actually see a massive, revenue ramp from some new catalyst for Tesla just gets extended out once again. Mm-hmm. And it's like, how long are you going to hold? Does this end up becoming opportunity cost versus even a SpaceX or another company that might be seeing revenue today? But it is crazy. Elon's companies, both SpaceX and Tesla, are becoming capital dependent giants. Yeah. And we're seeing this across even the most capital light businesses in the world. Google, Meta, Amazon's always been very capital intensive, but all of these companies have extreme expenses now. Free cash flow is going to be in the dumps for a while. Do you think that this changes the way that people are going to value the Mag 7 or these, inclusive of SpaceX and all those companies?
Yeah. So I made a post earlier, and so you have Meta at a $500 million free cash flow negative state, right? Now you have Google at like $5 billion plus for the quarter. Yeah. Microsoft is $17 billion in the green. Amazon is probably going to go red this quarter, right? So I think this is the way that they're looking at the markets right now, where it's like, okay, so this isn't just the Meta problem. Now Google's free cash flow negative, and they are perceiving near-term margin pressures. The market's looking ahead, and they're just like, we're probably going to get very bad news from Amazon and Azure. Like 82% Google Cloud Platform growth. Insane. But that just wasn't enough to move the needle. I mean, this is like the worst day for Google in a long time. I'm surprised it's down this much, but I think this is more of institutional unloading than the fact that the earnings were so bad. Like I think these institutions were pulling the eject button for quite some time. I mean, they take the headline and then they dump the stock even further as an excuse. If you've looked at daily candles for Google in like the last 60 days, some of these red days have pretty high volume, and it's like from the stupidest headline ever, right? The other day where Google is like delaying Gemini Pro 3.5. Yeah. It's like, come on, why are you going to bring the stock down 4% because of that? That's ridiculous. But the institutions were looking to sell into the volume, and that's usually what happens with these. And I got to say, from a short-term perspective, these med caps are just not looking good right now. And you can't really have like a rip your face off rally without the med caps. I mean, really, you just need Trump to go out there and just be like, guys, mission accomplished. We did it. We're signing a deal with Iran. Like everyone's waiting for that taco, man. But it's Thursday. So it's not Tuesday.
You're right. Yeah, we need him to escalate the war on a Friday night and then turn around by Monday.
Dude, who knows, man? Wait till the market closes. We're going to see some crazy news come out of it. Yeah. The second the market closes,
But so tell me, if the capital intensive names, if the Mag 7s are not great places to be, as you said, quantum might not be a great place for you. Where are you hiding? Are you going to cash?
I mean, I've let go of some positions in the last few weeks, kind of prepared for this. I didn't think it was going to come, but I'm more of a swing trader. So when the things break down, I prepare for it. I mean, I'm certainly very much long in the market. Like I have a lot of exposure in the market. I think I'm like 5% cash. Like I'm really not someone who goes like all cash, I'm out of this, guys, or like 20% cash, I'm out of this. But there were some warning signs, and I've been listening. I was just kind of surprised that just seeing the Metcaps break down in such a short period of time, it's like they couldn't wait to unload everything, right? But we've had some warning signs for a while. Shoulda, woulda, coulda, of course. They go, hey, why didn't you sell the top? It's like, I didn't know that was the top. If I guessed when the top was all the time, I would have missed out on so much, right? Like no one's ever going to guess the top.
Yeah.
But it is an ample time to get rid of a lot of short-term calls or swing positions, whatever it is. But I'm still invested in a lot of semiconductors. I would say higher concentrations in semiconductors right now, since they're benefiting for all this, right? The market really gives premium to stocks based on their earnings growth rate or earnings growth rates, right? So right now, NVIDIA and Micron are contributing, I think it's about 40% of the EPS growth for the S&P 500.
That's
wild. If you take them two out, it's like the low teens, right?
Yeah.
But right now we're looking at like the high teens, low 20%, right? So like it is the market has always been overvalued for a while, especially in a bull market, but it is very, very mega cap weighted. So when you start to have the EPS slow down, that could be an issue because of the earnings growth rate, right? So it's not the first derivative, it's a second derivative the market looks at, in my perception. A lot of people are going to keep an eye on Intel earnings tonight, right? We saw that news with SK Hynix and Intel recently, where it's like, oh, look, Intel is planning on or in talks to sell its Ohio plant to SK Hynix. And like they just shot that down in a few hours. Like so much speculation with these companies. But at the end of the day, like when you have CapEx, all that money is going towards semiconductors, or at least like 80% of it. And that's helping fuel the EPS growth for those companies. And ultimately, Micron and NVIDIA are the beneficiaries of that. And it's unfortunate that it's come to a point where the contribution toward the EPS growth of the S&P 500 is heavily weighted towards semiconductors and basically two giants. So what happens when those two slow down? Not when they go EPS negative, but when they slow down. They're not going to go EPS negative, at least not right now. But like what happens when it slows down?
Yeah.
That means the growth rate of EPS slows down. And that means the market is like, wait a minute, since we're very future and forward looking, slowing down is not good for something where 40% of our EPS growth rate is contributed by these two companies. So you better believe there is a lot of eyes on the NVIDIA earnings coming up. So like that, it's kind of a scary problem when you really think about it. But I don't think the AI revolution's over yet. I think it's gonna last for a while. The only question is, how will the market react to it? And we can never know that for sure.
Yeah.
What we do know is that, look, CapEx is going to be going up through 2028. It's going to be accelerating into 2028. So maybe we have 2 more years of spiked fruit punch in the bowl still. I mean, I'll keep partying, but like at some point, one of these major institutions is going to be like, I'm going to get out. And the next one's gonna be like, I'm going to get out. And then we start seeing the numbers, because the market's never going to price this all in as soon as we get that earnings report, because someone always knows. And then there's like a cascading effect onto that, where like more and more and more people know, and then stops get triggered and so on.
Yeah.
So we'll know ahead of time.
Yeah.
But I just from what I'm seeing and the guides and everything, like, I don't know if that's happening today. Could just be 10 years spiking up as it usually does, oil near $100, scaring the F out of the market.
The only thing where I would sort of push back as well, I do believe, and I don't think anyone believes in perpetuity, Micron is going to be growing at, whatever, 300+%.
No, definitely.
These are cyclical businesses. That said, do you think that these companies are proportionately valued already? I think Micron's forward PE right now is something along the lines of 6 times, maybe even a little bit lower than that. That there is some cheap valuations. Google's PE, I think now, forward PE, because not just pricing in what they just got from their SpaceX thing, is like 24 times next year's price to earnings.
Yeah.
Is that expensive in this market?
Well, the market's looking at it today, and they're just like, hold on a second. So Google has been buying back a lot of stock, propping up the EPS, even though they are growing their earnings still. Yep. But where are they going to get the money for all these additional buybacks and the dividends? They're going to have to raise more capital. That's the way the market's looking at it. And they're looking at the 10-year, and they're just like, that's a higher risk now because the 10-year is higher. So now I need to be paid back more as far as the rate of return on the debt I'm issuing Google, right? So that means debt becomes cheaper, and that means debt becomes riskier, and that means that companies need to start hedging their bets. And when you hedge your bets, you are in equivalent widening the credit spreads. Like it all always comes back to the rates, right? Everything comes back to the rates.
Sure.
At the end of the day, higher rates is bearish for tech, like super bearish for tech. And we're at a 5-year high. So, you're going to see, when it's 4:01 p.m., I want to see a tweet from Trump saying like, we did it, guys, mission accomplished. We're pulling back out of Iraq. And then, dude, we're going to gap up like 5% tomorrow. We're going to be limited up in the futures overnight. I don't know if that's going to happen. I'm not going to bet on it, but actually technically I'm betting on it because of the portfolio, but I guess that's what we're waiting for, right?
Yeah. Yeah. I just noticed your shirt, Nebius.
Yeah, baby.
What do you think about the Google comments saying that they are going to be using third-party providers to help expand capacity?
Dude, that was amazing news. I didn't see that. I mean, we knew that they were anyway, but like they legit said it on the phone call that CapEx is going to be significantly higher in 2027, and they're going to rely on third-party operators. I don't think operators is the right term, but dude, when I saw that, I was like, holy cow. And I looked at the after hours and I was like, good gravy, Nebius at 2:30. And then I see it today. I'm just like, I don't know if this is going to stick over here at a day like today. Like, I don't care how bullish you are when the mega caps are down like 3-4%. Like, you're not going to be able to say, but then I look over, I'm like, dude, how is Micron up 3% today? Crazy. Like, dude, the dispersion in this market's insane right now.
Crazy Tesla call out too, though. Tesla called out Micron and thanked them for the large allocation. It's wild. These companies talking about using more Micron, literally thanking them in their earnings call. There's not even a press release for this. You don't need to say anything. But Elon knows how to play the game.
Yeah, I mean, I still remember like watching those interviews where it's Larry Ellison. He's like, oh, me and like another CEO, I forget who it was. I think it was Elon. We're sitting down with Jensen. It's like, you sell us your chips, Yeah, dude, now Sanjay Mehrotra is on the other side of the table instead. Well, not probably with Jensen Huang. And now it's like memory. It's like, who would have ever thought? Who would have ever thought that was the case? I mean, ultimately, like the large funds is what moves the market, right? So they're buying Micron. As crazy as it sounds, like they're looking at the PE and they're like, I'm buying Micron. My only stipulation and my only skepticism for me buying Micron here, and I without a doubt, I'm still in semiconductors, so I expect the show to continue. My only thing is that, look, memory is the cyclical of the cycle, the most cyclical of the entire cycle.
Yeah.
They will look cheap at the end of the cycle. The question is that they are growing EPS by so much that I have to lean on the side and say, like, I think Micron 1500 is a possibility.
Yeah. Yeah.
Right. I think it might be. Like, it's obscene to think about that. But to me personally, what is that, like a 50% appreciation from today's prices? Which is great, right? But if Micron's at 1500, a lot of these semiconductors are going to double or triple, right? So that's why I'll ease more toward the small mid-cap portion to look at that. But I still do think Micron could be a $1,500 stock. I don't know when. It's just, when NVIDIA comes up, what do you think Jensen Huang's going to say? He's going to be like, yo, Sanjay's my boy, man.
Yeah.
Me and Sanjay were kicking it back last night, had a couple beers. He legit had a couple beers with, at the, what was it? Was it in Taiwan? He was like sitting down there in the corner, drinking some beers and whatever. Like, dude, Jensen does not look worried. He does not look worried one bit. I mean, handed $5 trillion company, he better not look worried, right?
Yeah.
But I think the show is going to continue after all of this nonsense. Like, dude, this war isn't going to last forever. When the war is over, what is going to happen?
we were here 3 weeks ago celebrating that this was going to come to an end, and now it's all starting back up again. And I don't know, does that make sure that the build out is going to slow down? Does it make that some of these companies are going to say that the memory and the rates that they have to pay on debt is just going to become unaffordable, so they have to stop? I don't know. But what I think we're going to see is Microsoft is going to end up coming out. Amazon's going to end up coming out. We're in the rush of earnings right now. Even Intel and SAP and all these companies. And what they're going to say is that the build out is continuing, CapEx is increasing, and they see more demand. Likely, because we just saw it from Google, and we're just seeing it from many of the other companies that just showed ASML, TSMC, all of these businesses. Would you, like, I'm not a swing trader, I'm a long-term investor. To me, as long as my thesis is going correct, the market can play its game, but I'm going to stay invested as long as, the build out continues to happen.
Yeah.
The hard part is that, like you said, the rate before this all falls apart will be almost their cheapest rates. like Micron will look extremely cheap right before the end.
Yeah.
Which is super, super scary. But I don't know when the end is. I think that's hard to see right now whenever backlogs are literally increasing more and more for Google, and likely to be the same for Microsoft and Oracle and all these companies.
Yeah, I mean, before all of this CapEx, AI, everything started, Google was already a hyperscaler, right? And they've already had a backlog. They're already growing. But now that they're having a massive build out on the fastest pace for all the hyperscalers, their backlog is growing, because guess what they're going to do with all of those data centers? They're going to build it up into systems, and they're going to rent out that compute, right? So Google's making money, right? They have 35% operating margins in Google Cloud Platform, which is crazy. And
highest ever.
I'm just like, stock's down 7%. Like, is it 7%? Yeah, 6.9%. Like, it's just like blows my mind, right? Like, is there something I'm missing? Like that. This is like what I ask myself every time we like come near the bottom, unfortunately, where it's like, I ask myself, like, am I missing something? Right.
Yeah.
I never sell out, but I have to reduce risk. But yeah, I'm a long-term swing trader, but at the same time, like, I don't sell out of a lot of my stuff when things are like this. Like, I just wait, or I hedge, or whatever it is, or I get rid of stuff that, is very short-term. Other than that, like, dude, if this scared me so much, I would have been sold out of Nebius at $60.
Yeah.
Right.
Yeah.
Like, I would have been sold out of Amazon at $150 at the bottom of the tariff tantrum. Right. Like, I would have sold out of a lot of stuff, but I didn't, because like, you really got to know like what you're going to hold, what you're not going to hold. Like, it happens many times with a lot of people, right? Like, a lot of people sold HIMS when they dipped down. Yeah. You see it at double today, and they're like, oh crap, I should have held. But it's like, how could you blame yourself? Like, looking at the data, looking at everything there, like, things have changed at that time. The Novo Nordisk lawsuit and all this stuff, and then they're trying to market their drug that they weren't supposed to in a legal fashion. You know what? It's like, it was like the worst possible scenario for HIMS, right? So it's like, how can you blame yourself for selling? Like, you can't blame yourself, right? So if it happens, and so be it. But as far as I see today, I don't see a tangible bearish thesis for semiconductors other than, oh, it's going to end at some point.
Yeah. Yeah. Where else are you looking to invest right now?
So I have been buying a lot of software before the big run up, right? And I've already owned like a position in ServiceNow, Rubrik, and Zeta. And I've recently added a lot of cybersecurity a few weeks ago, and specifically more in cybersecurity for network security. So when you think about inference from the client perspective, Netscope, from the broad network perspective on network security is Qualys. And there's more than a few companies that already deal here. You already know about Palo Alto, like they're freaking giant, but like these mid-cap companies can make big moves before they're recognized, right? So I already have a couple of those positions, and just really going to ride those because they're still in the green. There's also a couple of software companies that I'm looking at, but I do already have a lot of software exposure. I'm actually looking to get more semiconductor exposure once we start to see some stability in the markets. But yeah, no, I still do have a lot of semiconductor exposure, and these are like heavily weighted positions. So, you know, I'm really just going to hold them at this point, because I don't think it's over. Like I've on semiconductor, which now has exposure to robotics now that they're acquiring Synaptics. The unfortunate part is that acquisition was like basically the top of on semiconductor, a local top for on semiconductor, right? But if we think about all the talk about robotics from these companies, like, yeah, the timeline gets pushed back a little bit further per what Jensen Huang said and what Elon said. Like, oh, who would have thought Optimus isn't coming out this year? Like, come on, guys. Like, did you really think Optimus is going to come out this year? They should not have gotten rid of the Model X and Model S. I'm like so pissed about that still, but whatever. But it's like, yeah, Jensen Huang said we're 3-4 years away from the realization and usage of the ChatGPT moment of robotics, right? So we already had our ChatGPT of robotics where it's like, oh, you know, like you mentioned, the robots can open a drawer if they know they got to put an apple inside, right? But like the real usability of robotics, yeah, that's probably like 3 or 4 years away. But the market's not going to wait until then to price it in.
Can you, I cover AI and semiconductors and all of this stuff every single day. I don't nearly cover as much cybersecurity. Can you tell me a little bit more about those names? I'm not caught up to the space. So I don't even know if I've heard the names that you've said before. Obviously Palo Alto and stuff, but like, but yeah, tell me a bit more about your thesis.
Generally speaking, a lot of people know the big names because they're giants, right?
Yeah.
A lot of Wall Street talks about them. The smaller mid-cap companies like Checkpoint, also Tenable or 10B, like a lot of these other companies, a lot of people haven't really heard about because they're much smaller players. But from a ratings perspective, as far as how their platform, it's comparable actually to these larger platforms, right? But everyone's heard about CrowdStrike and SentinelOne. These are more on the client end protection. So you basically have your computer and it's guarding you from viruses and malware and whatever it is. And you have Palo Alto, which installs the agent in your computer as well as other systems in your network, which guards the entire network on its own, like it guards the enterprise. You have Zscaler does the same thing too. Fortinet, more of legacy, but they're really reaching into more of the modern technology, cloud native platforms and everything. And then you have data security, which basically guards your backup and recovery. That's where Rubrik comes in.
Yeah.
Another company people probably heard of is Commvault. That's more of like the legacy player. And there's many other companies out there that do a similar thing. But like these are the big names that everyone knows about. And then of course there's a cybersecurity giant Microsoft, and Cisco has cybersecurity exposure and everything. But yeah, Datadog, totally right, Datadog. That's more in application monitoring and log management, or CM, right? And these cybersecurity companies are actually getting to CM. So everyone knows Datadog, but then there's its competitor, Dynatrace, which a lot of people don't know about, which is not a small company, but they're definitely not like the leader in there, right? So you have your leaders and your secondary leaders, and then you have like the smaller players, and usually I stay around like the secondary and the smaller if I want to see that risk reward. But then there's sometimes where it's like I completely avoid it. Like SentinelOne, I used to own this company in the past, and I've sold it at profit. But if I look at the chart, it's literally trading at the same place it was trading like 4 years ago. Why? Because they're not profitable yet after 4 years. Yes, they might be non-GAAP profitable, but they're still not close to being profitable on a GAAP basis.
They're losing market share.
Yeah, they're losing market share. When CrowdStrike had that massive outage, they tried to take advantage of it, but it didn't work out for them, right? It's like you had all these opportunities, you didn't prove yourself, like that's game over for you. And I think the market is punishing it for it, right? And then you have companies like Zscaler trading at the same place it was trading like 4 or 5 years ago. Why? Well, I hope no one takes effect. Oh, CyberArk and Okta. Sorry, I forgot to mention that. I apologize. That's more in identity and security. And CyberArk was acquired by Palo Alto. But I hate to say it with Zscaler. Like I've traded Zscaler before, but dude, Jay Chandri is a CEO of Zscaler, and his family owns a lot of Zscaler, and they pay themselves through the nose with SBC. right? The company's not profitable yet. So hold on a second. Why are we paying you so much if you haven't brought profitability for this company that's over 10 years old, right? If you're growing, you're doing great and everything, then show it to us. And they haven't showed it to the market, and the market's punishing for them that, and their SPC is still high. This is literally a piggy bank for some of these CEOs. And this happens with a lot of companies that are out there where the company is a piggy bank for them. Like they're still the founder, they're still the CEO, but like they literally maintain their wealth through just exploiting the stock-based compensation of the company, right? I don't know if you ever heard of this company called Snapchat. Yeah, Evan Spiegel does the same exact thing too. Yeah, go ahead. Sorry about that.
No, I was just going to say that's pretty common across, any industry. You're always trying to track how much the CEOs and everything are paying themselves. But going more to the cybersecurity angle, how do you know which layer in the cybersecurity layer that you potentially are finding value in? Is it purely valuation, or is there certain ones that you're looking for a specific type of demand explosion in certain areas? How do you pick apart and learn about all these different areas in cybersecurity, considering it's such a wide, market?
I've been just generally working there for 2 years.
Okay.
Sorry,
Yeah.
2 decades, not 2 years, 2 decades. I know that I have a pretty good idea of the software industry. I've worked on it for so long. I've worked in the cloud industry for so long. So I have a pretty good idea with that. So like, I don't know how to say it, but I just know based on what I'm seeing around me. But moreover, I never used Netscope before, but I've seen it a lot installed on platforms. And when I was doing my research, ChatGPT, LLMs, reading articles and stuff. Also just to like kind of get an idea of what I'm looking at, Gartner and Forrester release like these big charts of competitors. And Netscope is pretty up there along with Qualysys with their aligned competitors there too. And then I do more research on it. I take a look at the perspectives of the company, where their TAM is, what their margins are. Are the margins expanding? Are they contracting? Is earnings growth expected to expand if they are profitable? Netscope's not profitable, so I don't use that metric in there. But I do look at their growth rate. Usually I look more in the growth rate whenever a company's not profitable, right? And then I look at competitors, how the competitor is doing on a comparative basis for valuation, right? So price to sales, EV sales forward is usually the best metric for software companies. Rule of 40 is something a lot of people look at, but you got to remember, rule of 40 is you can either use free cash flow margin or you can use operating margin plus their forward revenue growth, right? But that's what it's a derivative of. So I don't just look at the rule of 40. I just calculate and I can figure out the rule of 40 after that. But I take that into perspective.
But also, I guess what I'm trying to let me try to change my question a little bit, because I can find you a lot of fast growing companies and base it off rule of 40 and all that stuff. Why cybersecurity?
I mean, it's the most underappreciated, probably the most important sector out of all of AI.
But how do you value that?
How do I value that?
Yeah, like it's just based on multiple, because like whenever I take a look at CrowdStrike, I'm looking at a pretty pricey PE. It's a fast growing company and everything, but I can find you cheaper companies, faster growth rates, and better margins. So,
well, that's true, but are they in endpoint protection?
No, they're not.
Yeah.
But what I'm saying is, why do you need to invest in endpoint protection? What is driving you to invest in that sector?
Okay, so when you think about the amount of smartphones that are out there, the fact that we're adding more smartphones and mobile devices at scale very quickly, that's becoming very important, right? So a lot of what we've had has been server addition to data centers, right? But Apple has been forecasting a massive growth of mobile devices in the future. If you look at the growth of mobile devices around the entire world on a global scale, it's not accelerating at some crazy degree, but like more people, more devices, but not only people times devices, it's like exponential right now. It's because everyone has you can't install like CrowdStrike on your watch or anything, but I'm sure at some point a watch will be independent from a laptop or a phone. Sure. It's, so you're going to need to protect that too. Even on enterprise scale, they're also expanding the actual devices that people, or the client end devices are growing much faster as well. But also now you got to think about on the virtual machine perspective. So you don't need like a physical computer in order to have a client, right? You can install in like a hyperscaler or an EC2 instance, whatever it is. So that's going to be important too. But even CrowdStrike doesn't even just deal in like mobile devices or even laptops or computers. They also deal in network resources as well. Like these companies are growing, right? So what I usually do is I kind of look down at who their partners are, or I look down at like how fast companies are growing, but not only just their growth rate, but also their enterprise exposure, right? So you have a lot of companies that have small business and medium-sized businesses exposure. So you take something like Klaviyo. And the unfortunate part is that because they have so much exposure to SMB, that is super volatile and less predictable to enterprise, because enterprise usually signs like 4 or 5, 10-year contracts. Like ServiceNow, they have so much enterprise exposure, right? And they take a much smaller player like Monday.com when it comes to CRM, very volatile, because that could just fall off a cliff if things turn south, we have a recession. So those enterprise players tend to have higher premium based on the fact that they have more predictability, right? So that's
and it's
something
not very discretionary as well. Like you said, there's not going to really be a fall off the cliff in cybersecurity. Like
I think cybersecurity is probably the most underestimated sector. Like when I see a sell-off in software, and the market caught onto it at a certain point too, where it was like CrowdStrike was, it's freaking crazy. Pre-split CrowdStrike was $400, and I thought that was it, right? And now the thing pre-split is like $800, which is insane. CrowdStrike is insanely expensive, but like the Palantir, I'm not trying to compare CrowdStrike to Palantir, but I'm talking about their leadership and what they do. CrowdStrike's the best of breed. They control about 30 to 40% of all enterprise security, right? Yeah. From a client perspective. And Palo Alto is also a giant, same thing for them as well. Pre-split, Palo Alto was like $200. Now post-split, I think it's like $500 or $600 or something like that, right? Like they give these giants premium, and these hedge funds and institutions will continue to buy them because they're the best of the best. They don't really navigate their way into like buying Netscope or something, because one, the market cap's not big enough. But two, well, that's a lot of risk to have in a smaller company that could probably be down like 20% in a single day, right? So like they choose not to go that way. Like CrowdStrike won't have a 20% down day often, but that's less risk for them if they were to buy a lot of CrowdStrike. So, you know, it's like basically saying like, why don't the mega caps buy Micron when it's like $100 versus buying when it's $1,000? Because the mega cap's way bigger and there's a volume there to present themselves, right? So like it really depends on what kind of return you're seeking. Oh, you could probably get a double on Netscope. You're probably not going to get a double on Palo Alto from here unless we have some raging, oh my goodness, bull market.
Sure. No, I think that clears it up a little bit more for me. And then I saw a bunch of comments. People are talking about AI agents and stuff like this, and how that's going to essentially change traffic online and everything. Do you think that these companies are not only going to be able to work with more customers and there's going to be more endpoints, but that they're also going to be able to charge more because of that? Like margins will improve?
I think that because some of these companies have seat-based licenses, and because it's not like a one-to-one factor as far as like how many employees you have in your company, but it's more of how many systems you have in your company.
Okay.
Yeah, it's going to grow exponentially. Well, maybe not exponentially at this point, but it's going to grow pretty dramatically. And the reason why is that the more agents you have out there puts companies at risk, because now instead of listening to like 10 devices, they need to listen to hundreds.
Right.
Because these agents aren't just doing one task, they're doing like 100 tasks per day. Right. So it's like the complex that Mark Zuckerberg said the family of apps now has 1/3 of the entire world's population as monthly active users, or DAUs, right? Daily active users. It's like, hey, buddy, people like some like poor family in a random country in poverty, they're not like on Facebook. Oh, actually, maybe they are on Facebook every day, but a lot of those are bots, right? There's no way 1/3 of the population uses Facebook or the family apps every single day. Dude, I don't even use, you know what? I use WhatsApp now that I think about it, but
I'm definitely a daily user.
Yeah, but you get what I mean, right? Like a lot of it are bots, right? I think Google said that they have, nearly 1 billion monthly active users on Gemini. I think that was their comment. Don't quote me in that, but it was like a very high figure. Do you really think that that's all people, like humans using Gemini? No, they built 1 billion agents to interact with Gemini. I figured I was doing it today, right?
Wait, I don't know if I agree with that, but we'd have to somehow check that. I'd have to believe that Google or Meta or some of these companies have a way of judging whether or not they believe that, you know, those are individual people or individual bots. Like, I think it was 950 million actives on Gemini. You think that they're tracking individual agents for that?
My guess is if it has a license, it's a person. It's the way that I see it. We give licenses to service accounts all the time. There's
Okay,
no
I
one
see what you're
behind a
saying.
computer.
I see what you're
Yeah,
saying.
like it's a license. So my guess is they're looking at unique users with licenses and they're calculating based on that. And did they use it this month? Yes. Big check, right? And I'm guessing that's how they do it. Like I'm not an expert. If I was the expert at that, dude, I wouldn't be here on here. I'd be like working for DeepMind or something. But my guess is that that's what it is, right? Because if that wasn't the case, then we wouldn't see this massive demand for inference and edge compute. You wouldn't see it, right?
Yeah,
Because like everyone has one smartphone. So
no, I agree. I just find I use like all of the different companies choose this different metric. OpenAI chooses weekly, Meta chooses daily, Google chooses monthly, and I use all of those a week. I use Gemini, ChatGPT. I'm on all the apps. So for me, I'm a check across the board.
Yeah.
Yeah. So I don't know if everyone is like me in terms of using all the different companies or not, but yeah, maybe it's different because I've got consumer ones and then business accounts as well for Gemini. And I wonder if it checks it definitely probably does multiple accounts.
I mean, look at it this way. Do you only have one Gmail account?
No.
There you go.
I'm probably actively using like 6.
Yeah, I'm using a lot as well. They're all forwarding email to like 1 or 2 accounts.
Yeah.
But yeah, no, I have that too, right? I don't know. It's pretty wild. I mean, if you think about it to that degree, think about it 10 years from now.
Yeah.
You're probably going to have agents with their own Gmail accounts, right? And this is what you're seeing. This is why you're seeing a massive growth in compute, because everyone is like using exponential amounts of themselves, right?
Yeah.
That's where agents come in. Like you don't just have like 3-4 years ago, everyone was using ChatGPT, right? And then now today, ChatGPT, Claude, Perplexity, all these crazy things. And then actually, no, that was like last year. And now today it's like you create agents that use all of them and you have like 5 agents, right? Sometimes guys, you don't know if you have like 5 agents, but you do. Right?
Yeah.
you do. You have agents working for you. And the only reason why you don't know is because you didn't create the agents themselves. Applications are doing it on your behalf. Right? You ask your grandma, let's say not your grandma, maybe your mom. All right. I apologize. I don't know your situation, whatever, but let's just say you ask a relative who's using ChatGPT is like, you realize how many agents you're using? And they're just like, what the hell is an agent? I'm just asking this freaking thing how to cook my favorite apple pie tonight for the family, right? Like you said, they have no idea, but like they are using it, right? So
yeah. You were quick to backtrack there.
Well, because I don't want to be like, oh, what your mom is like, oh, I have a rough situation with my mom right now. I don't want to talk about it. It's like, okay, well, I apologize. I don't want to talk. I don't want to get in there, but you just never know everyone's situation. I'm sure you're fine, dude.
Sure, yeah. No, I get that. But this is why also, we get to look at financials of Google. We don't have to worry about the KPIs and stuff like this. We could just see, hey, did you or did you not do $112 billion in net income?
Yeah.
Based on all the costs of however many Gmail accounts and YouTube accounts and Gemini accounts that you have after that.
I mean, if we were to take the market's word for it on the way they see everything today, everything would just keep going down, right? But when Google was $150, I'm not saying it's the same place it was before when it was $150, but no one liked Google. Everyone was bashing on Sundar Pichai. People thought that
90, bro.
Yeah. Well, it was down at 90 in 2022. I'm talking about like when it was like $150 before it had a massive run up. But yeah, no, 2022, Google was at sub 90, Amazon was sub 90 or some crazy number. But yeah, like that's, no one wanted Google because things look bad and whatever. And now no one wants Google again. No one wants Meta. And then now it looks like they don't want Amazon either. And then 5 months down the road, everyone wants to buy it, right? It's like Micron $100. No way. Micron 1,000. Oh, I should have Micron at $100. Micron's back at $100. I ain't buying that shit, right? It's like, it's the same scenario over and over and over again. Question is, you got the conviction? Yes, pull the trigger.
Yeah. Are you listening to this AMD investor Q&A with us?
No, man, I got to drop.
Okay.
But I do appreciate it. Things about to start?
Yes. Yeah, in the next minute here.
All right.
Thanks so much, Sam. I'll put your links down in the description, or not in the description, in the comments. Appreciate you coming on, brother.
Thank you very much, sir. Really appreciate it.
Yeah, let's do it again.
All right.
See you, bud. All right. We are going to be jumping into AMD's Q&A for this accelerating AI conversation. There's music playing right now. So whenever that's ready, we'll switch over. The audio sounds terrible. Oh my gosh. What the heck? It sounds awful. This is Sam's chat or Sam's YouTube posted in the comments. So make sure you guys follow Sam. Thank him for coming on, giving us his time. But this AMD thing is terrible. Okay. Okay, so whenever we're ready here, I'll share with you guys this. This will be the next thing. We'll jump right in. If you guys missed the initial conversation, anything like that, or having Sam on, or any of these segments that we've done, we do have a second channel now that is covering all of this information. Okay, make sure you guys give it a follow. It's pinned in the comments right now. Oh my gosh, a lot of you guys have already followed. But okay, still music playing there. It's at Future Investing 2. So we'll be posting the AMD call here and the Q&A and all of that stuff if you don't have time to listen to it right now. All right. Cool. Still not up on AMD. Why are they always late? Okay. And we'll put up AMD's stock price as well here. Stock is down 2.3%, 539 right now. I just followed, just subscribed. Thank you guys. Okay. Is this thing not happening? Not subscribing till I get my paycheck. Did you do one time out, or was it you that said that I was doing your job for you, huh? Paycheck. Come on. Not even Marshall gets paid. He's working full time. Okay. It's looking like they're going to be late on this one. Isn't the AMD thing over? No. So the keynote is over. We covered that. This is the investor Q&A. So that was more focused on their developer side. But now we're looking to more of the instead of the developer side, we're looking at the investor side. Cool. 2 different events today. Yeah. Okay. I don't know, guys. I wish everything happened on time. Because I got to do so many things outside of this. We've been bumping out videos like crazy. Daily uploads. There's essentially 2 videos coming out a day on the side channel and a day coming out, or a video coming out per day on the main channel right now. Plus 4 to 7 hour live streams. Brother, you don't start your streams on time? Huh? Tanner, when did you stop working? I don't know how long it's been now. Has it been 2 years? October of like 2 years ago, I think. And then I went full time. And then Marshall came onto the team at the end of March. And that happened pretty quick. I was talking to him about it like the end of February. And then I hired him on pretty quickly. How did you quit? I quit. I had a book of business from being a financial advisor. I found a buyer and sold them my book and then never came back into work. Is there even a Marshall? We need a meet and greet with this mythical character. So he's going to be at the August 15th meetup in Toronto. If you guys want to meet the great and powerful Marshall. But yeah, he's been on the stream a couple times. The AMD call is still not going on just yet. They're late. Where's the meetup? It's in Toronto. You can check the link down below for all the details. All right. It's mathematically impossible to keep GAAP net profit margins above 50%. Is there any company that has maintained 50+% GAAP net profit margins? I'd actually have to think about that. This AMD thing. Oh, just started. All right. Ladies and gentlemen, enjoy.
2026 conference. My name is Matt Ramsey. I lead the financial strategy investor relations folks at AMD. We're delighted that you're here, and I'm delighted to be joined on stage by many of the folks that you saw in the keynote earlier. For those on the webcast, I'm just gonna, it's an audio only webcast, so I'll do a little bit of introduction and then provide some ground rules for the conversation that we're gonna have here with the investment community. First of all, joining me on stage here, these folks probably need no introduction, are our chair and CEO, Dr. Lisa Su, Vamsi Gopana, who runs our AI business, and McNamara, who runs the server business. And next to me is Forrest Norrod, who leads our overall data center business. We're going to take some Q&A here for the next 45 minutes or so. A couple of ground rules from me. You probably all know that we report our Q2 earnings in about 10 days' time. So if you could ask your questions on today's event and the contents of the conference and the keynote and the related press releases, I'd appreciate it. And if you ask any questions about our near-term financials, you will have wasted your question because I will instruct the folks not to answer it. Secondly, if you could maybe ask one question so we can get to as many questioners as we can. And the third point I'd like to make is I think we're all aware that there's another company in the ecosystem that reports earnings this afternoon, and those numbers may come out as during this session. So if you ask any questions related to that, I'm going to step in on those as well. So let's just make sure we have a productive session and everybody's on the rails. So Liz and Prab from my team are going to be running around to make sure that we get to your questions with microphones. But I just want to turn the floor over to Lisa to make a few opening comments. Thank you.
Okay, great. Thank you, Matt. Thank you all for being here. I think I've done a lot of talking this morning already, so I'm probably not going to have much in terms of opening commentary, other than to say it's just incredible how I feel like every time I talk to a group like this, we have so much has happened since just in the last month. So we talked a lot today about sort of the large and growing opportunity in AI. We talked about the dynamics for the accelerator business, the CPU business. I think we are tremendously excited about the launch of Helios and the launch of Venice and all that it entails. But why don't we just jump right into questions?
Liz, you're standing next to Tom.
Thank you. Sitting in the front, Tom comes straight off. Thank you, guys. Appreciate it. It's been a great day. I guess I'll start with the CPU TAM. So 220 billion in 2030. You guys had previously talked about 50% of that market. With the bigger numbers, is that still the expectation? And maybe update us on what you think the share could be.
Yeah, absolutely. So we continue to be more and more excited about the CPU market, the agentic AI workloads. The more we talk to customers, the more we understand what's happening. I think we see a tremendous growth in CPUs. So yes, we've updated our TAM to over 50% over the next 3 or 4 years, reaching over 200 billion. We're still very much focused on being over 50% of that market. I think we've had really tremendous progress over the last few quarters. But with the Venice launch, what we're hearing from customers, what we're seeing in terms of the interest is actually an expanding set of workloads. So Venice truly is optimized for AI workloads, head node, agentic AI. We're making tremendous progress in enterprise. So all of those things give us confidence that we can continue to grow significantly ahead of the market.
As long as you just go with Mark there, since you're right next to Mark.
Great. Thanks for the great presentation today. Really appreciate it. I had a two-part on the same topic, if you don't mind, Matt. Part one would be the $220 billion TAM for CPUs over CPUs. How does that split between agentic versus standard server versus the head node? And then the second question is, or the second part of the question, is how do you estimate the TAM here? Because I mean, if I use one agent, or if I use 10 agents, or I could use 100 agents, it seems like the TAM could grow exponentially. So, like, how?
Guys, I can't understand. All right, that'll be the wrap of the stream. Obviously, that won't be in the replay afterwards. I apologize. You can go to AMD's website to try to find the link to Advancing AI's Q&A, but their microphone situation has been terrible. Anyway, thank you all so much for watching. Really do appreciate your time. Consider subscribing, especially to the second channel. Bye for now.